How to profit in a dysfunctional market. I'm Don Kaufman, and you are watching a TheoTrade presentation. And I love that title tonight because nothing can describe this marketplace more effectively than the word dysfunctional. Just a dysfunctional world, dysfunctional marketplace. And if you've watched the marketplace at all in the last couple of weeks, couple of months, I think you would probably agree with that statement. You're going to find out specifically, though, what I mean by dysfunctional market. Brief risk disclosure. We're not financial advisors or a broker-dealer. And I always throw this up here. Many of you may know that I did come from the brokerage world. Hence, I am no longer in the financial advice business. I'm no longer a broker-dealer. I left TD Ameritrade back in about 2015, but I'll discuss that here momentarily. Got a copyright disclaimer. It's mine. It's not yours. You know what? One of the key things I like to also throw up here before we officially get started. Listen, if you ever need to get a hold of me after this evening, I'm right here. Just go to support@theotrade.com. By the way, I answer emails. Put Don in the heading. Put Don in the heading, and I will get back to you. We answer literally thousands and thousands of emails every single week, but all of us and all of our instructors here answer emails. We like, you guys can even bounce trade ideas off of us. That's what we're here for. It's one of the reasons I throw this up here. We have our office. Our primary office is located in North Scottsdale. None of us have been there since February now. It's actually late February. We decided to kind of break ranks and work predominantly from remotely, which is probably similar to most of you. Nevertheless, I hear it's nice in Scottsdale this time of year. A balmy 116. All right, this is why you're here. Listen, anytime you're going to come and you're going to attend a webcast like this, right, you got to make it worth your while. And you got to walk away with definitive knowledge. And I'm going to impart a couple of ideas upon you here this evening. One of the first ones. We're going to talk about some of my favorite market instrument to profit from changes in market volatility. So you're not just a biased trader or directional trader. All right. Number 2 over here, discover volatility ranking. So we're going to talk a little bit about volatility ranking, how to use this tool in order to produce potential profits. Learn to take directional bias out of the marketplace and use the power of volatility to your advantage. And of course, the logic and strategic formula behind what we term gamma irons. And that's one of the strategies that we're going to be discussing tonight is gamma irons. You're going to understand precisely why these trades are working, are heavily in play right now. In fact, you're going to understand that here in just a moment. If some of the terminology that I'm using here, okay, is a little bit foreign to you, that's okay at this point. Listen, grasp, okay, if you're brand new, I want you to be able to grasp big, broad strokes of logic, right? Where I'm going tonight. Don't let, terms like logic and strategic formula and gamma irons throw you, okay? A lot of people don't really know what volatility is. We're going to discuss that. Volatility ranking, foreign to most people, okay? Not only, even if you understand volatility ranking, I'm going to show you how it's going to come into play right here, right now. And again, you're going to see some very slick little tools that I'm using right now for some P&L. Let's get down to business. Before I get too deep into this, tonight, stay with me until the end of the webcast. We're going to provide you our auto expected move indicator. Now, I want to elaborate upon this for just a second. Okay, it's a $497 value. When you see this indicator, you're going to understand why. But the auto expected move indicator, the reason, okay, that we're providing it to you this evening is I'm going to be using this constantly this evening. You're actually going to see me. The auto expected move indicator is going to be one of the primary indications of execution of the strategy that I'm about to show you. And I'm of the strong belief that if you're going to spend, the next, hour or 90 minutes with us, that it would be a loss leader not to give you this particular indicator. And we're going to do just that. Again, can easily charge $497 for it. We will give you this indicator right at the end of the webcast. I'll provide you a link to this indicator. This happens to be the most advanced indicator ever compiled. It's an indicator that has literally changed the way that we view markets. And this is a bit about what it looks like. You're going to learn about it specifically tonight, because a portion of this webcast is going to be dedicated expressly to this expected move indicator. So expected moves, what are they? So they're these ranges. And I'm just going to highlight for a second. They're ranges. You see like three little lines in your screen. Look, 1, 2, 3. Those three little lines are brought to you by the options marketplace. Not everybody in here necessarily has options experience, but that's fine. So this is how the option marketplace is handicapping risk. It says, for example, we're supposed to move up $8 or down $8. That's the way options work. Now, the question is, do we really move that far? Okay. And that's what this indicator helps you answer. Here, we moved outside of it. Here, we moved outside of it. We moved outside of it there. We moved outside of it there. So you can see the options marketplace was wrong. So what the auto expected move does, okay, these ranges are derived from the options chain. And what it ultimately does is it highlights breaches of the expected move. And it highlights these right at the end of the week. And what it actually defines, the whole study, efficiency or lack of efficiency. And it actually assists in the knowledge of what we term buying premium versus selling premium. Now, again, there's some pretty complex ideas that I just threw out there in a couple of moments. But I want you guys to know, again, we will give you the link to the indicator, right? And we give that to you because, again, I'm going to be elaborating upon this particular indicator. As I said, you go through and you spend 90 minutes with me today. I want you to make sure that you have something definitive, that you're leaving here with something tangible that you can walk away, that you can actually use inside of the marketplace. And I'm going to tell you right now, if you use this expected move indicator, people, it's going to change the way you view about and feel about the markets. By the way, for those of you, if you tune in to any of the nightly videos that we do, I'll just make a quick point. Any of the nightly videos that we do. How many of you have ever tuned into some of the nightly videos that we do? The last several nights, we said, get ready for a wicked move to under the expected move inside of the NASDAQ. And that's precisely, this is the QQQ. That is precisely what has actually played out. That particular, that particular move was called exclusively from the expected moves in here. So before I go too deep, housekeeping. All right, it's a couple of housekeeping items. So tonight it's going to be a skill set, and I just threw a couple of ideas at you real quick right up front. But I'm telling you, pay attention during the following course material. It's the only way you're going to get anything out of this tonight. Again, I don't, give you a big song and dance. Listen, shut the door, turn off Skype, turn off chat, whatever else might be distracting you. Close Facebook. It's crap anyway, right? I might have a short position in there. Phone's on silent mode. Kick out the kids. Definitely kick out the kids. Grandkids, you shouldn't be around them anyway. Okay? They're dirty. The dog can stay. He's good. He's good. All right? Listen, you took the time to be here. This is important. I'm going to go through a lot of material. Focus on being here. All right? This is a little bit about me. I watched order flow for 15 years. That is a very large part of why I am here this evening and here at TheoTrade. Little background on myself before we dive too deep into this. Some of you, maybe I've met over the years. Some of you have not. I have been in the trading industry for quite some time. So, quick background on myself. So again, I came from a family of traders. I had plenty of family trading, uncles, cousins, traded on the floor. And I'll just give you the brief story here. In the mid-'70s, my uncle started trading on the floor of the Chicago Board Options Exchange. And he's a talented guy, he's a talented mathematician, but he was one of the very few people that could take mathematics and apply it to a live environment. He took one seat in 1976 on the Chicago Board Options Exchange. By 1983, he had over 500 seats on exchanges worldwide. He built a trading firm. The firm was called Condor and Associates. It was hailed as one of the greatest trading firms ever. They sold the firm. He specifically sold the firm in 1992 to the Swiss bank. At that point, he had already, semi-retired, That's actually how I ended up in Arizona. They retired to Scottsdale, Arizona, all the way back in the early 80s. In 92, it made him a multi-billionaire. The firm went on to be, of course, UBS. And the rest is kind of history. I had a couple of cousins that also traded on the floor and got me involved in it in the late 90s. So in 1998, 3 weeks out of college, I went and started trading in Chicago. Only a few years after that, I went to work. I met a couple of guys on the floor, and they said, "You got to get off the trading floor. The trading floor is dead. Let's we're building a brokerage firm. Let's get you off the floor, and you can come work with us at this startup firm. It's called Thinkorswim." I had no idea what it was. I really didn't, but I liked the idea. I didn't love the trading floor. Never did. People, talk about the trading floor as being wonderful. It was more of a sport than it was a financial product. So I went to work for this startup firm called Thinkorswim, and I built their entire education division starting back in like 2001. And I was on the executive team. We took the company public in 2007. We went on to be acquired by none other than TD Ameritrade. That was in 2010. And then I went on to actually run education for all of TD Ameritrade. At the time, they had 7 million clients. And I personally exited TD Ameritrade in 2015. Pretty heavy shareholder up until approximately 2016 when I exited the rest of my shares as well. So again, in that time, I ran education for both firms. And the most important portion of that story is I had access to the largest retail order flow in the entire industry. And most people have no idea what that means, but I could see what everybody was doing. One of the things that we were better at than almost any other firm, in existence when it comes to Thinkorswim and TD Ameritrade, we actually watched flow and we studied flow, and we built our education division based on order flow. What's order flow? It's watching everything that you did. I could tell you definitively, like, we would study iron condors, we would study covered calls, we would study who trades futures, who trades options, who trades stocks. I can tell you who made money, who lost money, and we would look at this in massive, massive amounts of data. 7 million clients. At the time, there were over 1.2 million people trading options at the firm. We know exactly what works and what doesn't. And a lot of the education that you get here at TheoTrade, that's where it comes from. What you learn here comes from literally watching billions, of dollars and others' mistakes, and really the knowledge of what works best for retail traders. I traded in Chicago, traded on the floor, traded upstairs. Tell you what, none of that crap matters. Retail is a completely different business. What you do on a day-to-day basis is vastly different. And that's specifically what we learned at both Thinkorswim and TD Ameritrade. So it's a little bit about my background, and it's in large portion why I'm here, and why we actually built TheoTrade. Listen, I still do a couple of media appearances every now and again. This is actually in studio. It was the last time I was in studio at none other than TD Ameritrade. I'm still on the TD Ameritrade network. I do weekly presentations on the TD Ameritrade network. I'll do CNBC from time to time. This is one of the more memorable moments on CNBC, and the only reason it's more memorable, it's not just because it's me against the shark, Kevin O'Leary. It's because I made him agree with me. I beat him up and made him agree with me. I was the short, he was the long. It actually worked out for both of us. It was good. Let's get down to it tonight. Listen, what's going on right now in the marketplace? When we talk about a little dysfunction in the marketplace, this is a difficult time. It's a difficult time, I think, for people personally, but in the marketplace, chaos rules, dysfunction rules. And you can't ever forget that volatility is a very powerful, very, very good thing. And I stress that to each and every one of you, that if you have been knocked around a little bit in this marketplace, everybody was nervous in March. Now everybody feels like a genius come July. I mean, it's a big portion of it. That's what volatility is. And again, it is a very good thing. And I'm going to describe precisely why tonight. Another thing I wanted to kind of mention in here, and this is something I've actually been talking about a lot. And the reason I'm talking about quite a bit is people don't realize when I say volatility is a good thing, apparently I'm not the only one that believes so. If you take a look, this happens to be none other than TD Ameritrade. And I throw this up here because I understand, obviously, TD Ameritrade's metrics, but there is more retail trading. You're a retail trader. You're not a market maker. You're not a professional trader. Most of you are considered retail traders. There are more retail There's more retail trading activity at TD Ameritrade, okay, than any other brokerage firm, okay, by far, by a multiple of like times 3, okay? And if you want to get a feel for what's going on in the marketplace right now, listen, the number of trades are exploding. You cannot even get a grip on how wild this is. Check this out. This is September, October, and November. And the number I want you to look at is right here on the bottom of the screen. This basically means back in September, they were doing about 810,000 trades a day. So 800,000 trades a day were going through the systems at TD Ameritrade. Okay, then commissions went free. Where did commissions go free? Right here. So commissions went free in November. And yeah, the activity kind of bumped up a little bit. But by December, it was nothing. By January, it picked up a little bit, but the volatility started to pick up. By February, coronavirus. It is on, people. Look how many trades they're doing as of May. The June statistics are not out yet. They'll be out really soon. Check this out. 3.3 million. Okay, that's an M. Million trades every single day are flying through the pipes at TD Ameritrade. That is unheard of. It's incredible. And by the way, I took this directly from the TD Ameritrade investor relations site because I wanted you to see, hey, when I make a statement like, volatility is good, okay, I'm going to back that up with something. And I'm going to back it up with the fact that the number of trades being done, 3.3 million every day. And again, that's, in large part, some of the commissions are free. Okay, push that aside because free commissions, that was back here in October, November. Coming in December, it's all about volatility right now. Everybody is engaged. We're sitting at home. We're going after it. Now, let's get down to business. Let's talk a little strategy, show you a couple of trades. First and foremost, Outlier. We're going to be talking quite a bit this evening about what is termed outliers. All right? Outliers. And you thought being an outlier was a very bad thing, right? So here, when we talk a little bit about outlier moves, what am I referencing when I say, and you thought outlier was a bad thing, okay? Outlier trades. A lot of what I have done, okay, over the years in terms of P&L has in very large part been due to outlier moves, okay? What do outlier moves really mean, and what is an outlier? Okay, I guess if you want to think about an outlier, we're going to talk a little bit about this, obviously, this evening. Okay, when you think about an outlier, you look at a distribution curve. You look at a distribution curve. Most of the stuff happens in here, right? There's what? There's really, really good drivers and there's really, really bad drivers, but most of us fall in here, right? The meat of the distribution curve. That's how I guess most people can think of a distribution curve. What's an outlier? An outlier is it's an anomaly. It's out here. It's an anomaly. It's out here. It's out here. Okay. It's just that. It's an anomaly. It's out there, people. Love it every minute of it. You got to understand outliers right now, okay, are far more commonplace than they should be. Now I'm going to show you the direct result of outlier moves. If you have never seen, okay, what you are currently looking at, I'm going to take you through this just real briefly because I want you to understand. Outlier moves, all right, can be the most phenomenal resource to you if you know, okay, how to take advantage of them. What you're looking at over here is a 5-day net liquidating value taken, okay, at 3 different periods of time. The most recent period, of course, being today. It wouldn't be effective if I didn't show you this literally to this day, okay? Here is, and again, it's a 5-day net liquidating value. It's kind of in reverse, and it's in reverse because this comes directly from which platform? For those of you that are a little newer here and are unfamiliar, this is directly taken from the Thinkorswim platform. This is a screenshot of my account. And you can see this is starting on February 23rd all the way to February 27th. The account, okay, and that's a 1-week period of time, jumped from $211,000 to $248,000. All right, then I actually spliced forward about another month. Here, I'm at about $305,000, okay? That week wasn't phenomenal, but you know what? I took a screenshot that week because I did a webinar, right? So it went from $305,000 to $308,000, okay? All right, then I jump forward a little bit in time. There's only so many of these I could possibly fit in the screen. This particular week, by the way, so we're all clear. We have some weekends in here, a little bit of weekend in here, but that's okay. This is like a Friday. This is Saturday, a Sunday. This is Monday. Apparently, I had a very good Monday, and then this is to today. I'm up to $647,000, 196 cents and change. So this is the direct result, again, the direct result of outlier moves. And I'm actually going to show you a bit about how I'm trading some of those outlier moves. In fact, I'm going to show you some of the trades. One of the first things that I want to kick off with tonight is showing you a couple of trades that I have done. And then I'm going to further this and show you even trades with less risk. One of the things that I've been asked time and again, okay, people want to get into trades with just absolutely nominal amounts of risk. And most of these outlier move trades have nominal risk. But I've withered that down even more for this evening's presentation. I think that's why you're going to find this so interesting tonight. Again, this is just screenshots from Thinkorswim at 3 distinct periods in time. I wanted to give you a full week's view of P&L. I know it's not too exciting to look at a Friday. I ended Friday, Saturday, Sunday, we're not going to move. And then obviously Monday and Tuesday. Today wasn't a stellar day. I had one really great trade though on in today's session. So let's show you a couple of the moves. This is trading outlier events. What you're looking at here, and I just want to familiarize yourself with this because you're going to see it a couple of times throughout the course of the evening. You don't have to grasp everything about this trade. First and foremost, the trade that I'm showing you here, okay, is most definitively options. Okay, you do not have to understand options at this point in the game. It's fine. I just want you to understand, okay, a little bit about the risk in the trade. Okay, here's the exact time I put the trade on, the exact time I took the trade off. This is all about outlier type events. So this happens to be what we term a back ratio. I put this trade on for a 25-cent credit. I took the trade off for a $2.10 credit. So effectively what that means is I put the trade on for literally a $25 credit. That's if I were to do one contract. I took it off for $210. Okay, but if I wanted to do multiple contracts, this could be $250, and this could be obviously, $2,100. That's where I just wanted to start to kind of familiarize yourself with looking at this. And this is it's just a quick back spread. There's nothing cute about it. Okay, the risk in here, yeah, there's risk in this trade. Even though I put it on for a 25-cent credit, there is risk in the trade. The next outlier, EEM, and I'm just going to fly through these because I want to show you, people see, look, your account just ran from $200,000 to $600,000. What'd you do? Okay. I traded a lot of outlier strategies, and I'm showing you some of the most recent ones. By the way, I'm not going to show you, I've got like one or two trades in here from a few months back, but I'm not going to show you a bunch of trades from the crash back in March. I want to show you this stuff is applicable right now. Everything that I'm showing you has been open and closed already. It's applicable right now. So the TLT back spread. Next one, EEM back spread. The EEM back spread was actually opened here on May 8th, closed on June 5th. 18-cent credit, took it off for $1.07. That doesn't seem like much, but people, it's a $30 product. Give me a break! It's a $30 product. It's not even like a big product. The next one I wanted to show you, this is the XLF. What's the XLF? It's the financials. Put on May 12th, taken off May 27th. I put it on actually for a 0 and took it off for a 51-cent credit. We having fun yet? Just flying through a couple one. This is another XLF back spread. Okay, I'm into the XLF. This one's actually put on June 1st, taken off June 3rd. Every 25 cents I put on for a credit, I took it off for an additional 26-cent credit. So I'm netting, okay, over 50 cents per contract, which you're like, whatever, man, it's 50 cents. It's a $22 product. What do you again, that's huge, huge returns. By the way, all the trades that I'm actually showing you here are clientele were trading with me. If you took a look at the date of the trades, clientele, XLF back spreads, and I had some Baidu back ratios. Closed my XLF. Thanks, Don. Got out of XLF at 204. Some people held them a little bit longer. XLF back ratio was a nice winner. Another outlier event over here. Again, similar time frames. All this stuff, though, is super recent. Okay. And if you're looking at this, you're like, how come you don't have a bunch of July trades. There's a couple July trades coming, but the reality is some of the July trades are still opened. Like as I said, recent. I'm trying to get as recent as I possibly can. This is June 2nd, exiting June 5th. I actually put this XLE, this is the energy sector, for a 5-cent debit, closed it for a $1.35 credit. Okay, and I just continue on my lovely way here. Here's a Microsoft back spread. This one's getting even more recent. In this particular back spread, I put it on in Microsoft for a 76-cent credit, closed it for a $5.40 credit. Now, I wanted to bring this one into perspective because you saw the XLF a moment ago. You're like, 50 cents is nothing. Yeah, well, $5 is not nothing, but this is what, $185 product at the time I was trading it. Actually, product ran to over 200. That's why I had such decent P&L on this one. This is also, again, our members are trading with us. This is John said sold one Microsoft back ratio for 550. Omar filled at 587. Volatility 2, just to show you. Okay, some of these people are filling better than me. I filled at 540. This guy filled for 550. He filled for 587. Okay, and this again, I'll show you. This is a big time outlier trading event. Here's something a little bit different. This is actually a SPY intraday trade. This one I actually put on and took off in the exact same day. So I wanted to start with this tonight. And the reason I wanted to start with this, I'm going to show you every trade that I'm showing you here right now, okay, has a common theme. The common theme is they're outliers, okay? And what I mean outliers is, number one, the trades that I'm showing you are not, okay, heavily monitored trades. These are not trades I'm sitting there all day long. This trade, okay, happens to be an intraday trade. Put on in the morning, taken off in the afternoon. It took it off 9 minutes to go to the close. Put this on 30 minutes after the open. And this is a big one. This is every $88 I invested. I got back $717. By the way, that's yesterday. Okay, and if you saw my P&L yesterday, my P&L yesterday was in very large part predicated on this particular trade. I had a couple of contracts at this thing on literally yesterday. It's July 13th. Trade was open and closed in the exact same day. That's it. 88 cents was turned into $7.17. By the way, here's a couple of clients that ran along with us on this particular trade. This is Daniel. It says, hey guys, new member. By the way, this is specifically from yesterday. New member. New member here. Been lurking in the chat for about a month. Okay, was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. Okay, Max L. Don, thank you. All right, this is actually another gentleman who actually sold his for $737. Okay, get your Don dollars. This was big home run yesterday. This is actually a gentleman that posted his opening trade. Literally, he paid 51 cents, got out at 7:30, and then Rich down below. Don, thanks for the lessons on price discovery and allocation. Legged into 3 of the SPY puts. This guy did 3 of the SPY puts as low as 76 cents. Took off risk at 268, booked 221, and let the runner go to 578. Okay, happy with the way I managed it. That's pretty much it. That's it for a couple of outlier trades. But again, I stress to you, this is the kind of trading that people need to understand a little bit more about here in the near term. And again, I wanted to show you a couple of outlier trades right off the bat. We're going to kind of continue forward. By the way, somebody asked me the other day, what do you do when you make money over here? This is my outlier trade. When I say this is my outlier trade, during the coronavirus, what does somebody do with a couple of bucks? I built a gym in the house. By the way, I know doesn't look right now. They're doing the floor. Okay. I apologize in the picture. They haven't done the floor yet. They had to paint the entire thing, but we built a gym in the house. That's what I do with P&L at this point in time. Can't go anywhere. Can't do anything. I bought an entire gym. All right. Onward and upward. Let's get to know what an outlier is. Talk a little bit about this for a second. So never mind what these axes mean. All I want you to understand is that most people in this business, okay, do just this. They just run with the flock. They don't really get, all right? Outlier at this point in time, that's what this business is about. If you actually want to hit home runs, you want to knock the cover off the ball, you got to understand in this business outliers, because the whole title of tonight's presentation, okay, is, strategizing in a dysfunctional marketplace, the thing that people don't get about the marketplace is the dysfunction is just that. There are outlier events that have been happening sequentially. This crap cannot, like you're like, it can't keep happening. And it does. And it keeps going. And it keeps going. And that's one of the things. There are so many of these little dots showing up that just literally shouldn't be there. There's a lot of people that are really impressed with themselves right now because they're like, I bought Tesla. I'm going to run with it, baby. I'm going to run with it. Okay. That unto itself is an outlier, but they're not even aware what they're trading at any point in time. So when I say, what are outlier moves in markets? Okay. And more appropriately, how can we find these moves with degrees of consistency? The funny thing is about like outliers, again, this is a marketplace that's so chaotic that there's consistency, okay, to the extreme, which, logically, your head will just explode when you start to think about that. So as we jump into this, we're going to start talking a little bit about strategy. Before we get too deep into strategy, I got to give everybody kind of a quick refresher here on volatility and risk. That all right with everybody? Some people kind of know what this is. Some people don't. Okay. I love what somebody said. Instead of the gym, I should have put in a golf simulator. That's what my wife said. That's what my wife said. Hey, you guys are killing me. What I want to get into is, again, a little bit of a recap, volatility and risk. And we're going to have a little bit of understanding here. Now, listen, tonight, I'm not going to force options down anybody's throat, but I am going to tell you, option markets are an invaluable resource these days. It's priceless to understand what the option marketplace is doing, because the option markets, they're putting a price tag on risk. And when people talk about volatility, right, volatility and risk are pretty much the same thing. So when I say, options are putting a price tag on risk, you're like, what does that mean? You look at a stock. It doesn't matter. I mean, you might want to look at something like Tesla. And if you think that Tesla can move higher or lower, okay, I have a question for you. How far is Tesla likely to move? Anybody? How far is Tesla likely to move? Because I think a lot of people probably have that question. I mean, Tesla's Mr. Toad's wild ride. So how far is Tesla likely to move? What if I could tell you? And I could tell you with a pretty good degree of certainty. And I'll tell you what, if I'm wrong, you can make money off of it. Meaning that if I say that Tesla, okay, can move, let's say, $200 in the next couple of days. If I'm wrong, you can actually profit off of it. What does that mean if you're wrong? Well, let's say it moves more. If it moves more than $200, the question is, how do you know that Tesla is going to move $200? I'll tell you exactly how you know. Go look at the option markets. There's one thing that I'm really adamant about, and it's this. I'm not asking you necessarily to trade options, but I am telling you this. If you do not look at options, you are blind. You're blind because options are telling you, okay, it's implying what the risk that's coming is. That's what options are. They're putting price tags on risk. I mean, when people look at the price of options, they're like, I don't get it. Listen, pricing in markets and pricing in options, it's all determined via market participants. So when I say this, let me give you an example. Okay, you have a stock. By the way, I call every stock, and that stock is trading at 200, right? So the stock's trading at 200. And for those of you that don't know options, that's fine. You look at a 200 call, okay? And the 200 call, we're going to put that thing trading for as much as $6, okay? The 200 call is trading for $6. So a 200 call, for those of you that are new to this, what's a 200 call? 200 call gives you the right to buy the stock at 200. That's all options are. You're like, wait, what? I go, you have the right to buy the stock at 200. You're like, but I don't want to buy the stock. I didn't say you had to buy the stock, but you have the right to buy the stock at 200. But what if I don't want to buy the stock? I didn't say you had to buy the stock. People buy options to turn around and later sell options because options can appreciate and or depreciate in value, just like a stock. But here's the whole key to this option. I'm not asking you necessarily to trade it. Not. But I am asking you to understand why the option is trading for $6. Okay? That crap is important. That's important. If you're going to be involved in this business, okay, you better understand why this option is trading for $6. Because if you don't get that, you're way behind the curve. You're like, I don't care. I'll just use a stop order. It has nothing to do with that. There's an implication here. The implication, okay, is if this option is trading for $6, that this stock, people, it can move. Now, that option, this 200 call is good for a period of what? Time. Okay? How long? Let's say that period of time is 1 month. Is 1 month okay? I can make it 1 month. I can make it 1 day. And Tesla, this thing wouldn't be what? It's 1 hour. But the point that I'm making, $6. But if this stock, okay, were something like Tesla, that wouldn't be trading for $6. That would be trading for $60, which is insane. Pay $60 for an option on a $200 stock? You're like, yeah. Why? Because it's Tesla. Because the thing can move. Listen, higher risk, which means the stock can move more, equates to higher option pricing. Lower risk. What's lower risk? Like Procter Gamble. That thing it's a stock with a nail in its foot. I think I'm going to move. It never moves. All right. So it's going to be lower option pricing. In the end, okay, option pricing. I always ask people, I go, oh, what price is options? And they go, the Black-Scholes model. All right. Especially the engineers and math geeks, the Black-Scholes model. Black-Scholes model doesn't price anything. In the end, it all comes down to supply and demand. If everybody demands options, price goes higher. If there's not a lot of movement, the thing's pretty mellow stock, option price goes lower. Okay. What's volatility been lately? What have you done for me lately? Like, seriously, what's volatility been in the markets lately? You guys tell me. Come on, people. This is an interactive portion over here. What's volatility been lately? High, low, middle of the road? Talk about risk, talk about markets. We got one person that's getting this, okay? All right. Listen, volatility, it's been consistent. It's been high. Most of you, even if you've traded in the last 20 years, average implied volatility over the last like 20 years, it's down below 17 VIX. People go, oh yeah, it's talking about the VIX. I've heard of that thing. That's the volatility index. It's the fear indicator. Yeah, well, right now you're trading at about between the 28 and 30 VIX. And you've been in a 28 and 30 VIX pretty much since the end of February. So you got what? March, April, May, June, you're into July. You got 5 months of volatility. And the funny thing is, the volatility has remained high even in a rally, which is just gold, Jerry, gold. That's the thing like people don't get. I'm telling you, all of this comes to Outlier. You have an outlier in volatility right now. So before we go any further, let's understand a little bit about volatility. Because volatility like throws people. A minute ago, I just talked about the VIX. Okay? I talked about the VIX a second ago. And it's funny because people will talk about the VIX all the time. They go, oh yeah, the VIX, the VIX, the VIX, the VIX. What is it? It's the S&P 500 Volatility Index. Do you know what the VIX is? It's an equation. Nobody actually trades it. You go, wait, but there's options on it. Yeah, but the options are based on the equation of the VIX. What's the VIX of the equation? The VIX equation is the SPX. It's the SPX options. I'm not going to confuse you. Okay, but I want you to know the VIX right now, it's somewhere in and around the 30 level. I know I'm rounding up a little bit. It amuses me. So let's say that the VIX is at 30. Most people go, the heck does that even mean? The VIX is at 30. They go, that means it's high. How do you know? How do you know that the VIX is high? Okay, maybe the average VIX is like 60. You wouldn't know if you just looked at it for the first time. You go, I consulted my chart. We're going to come to that tonight. But I want you to understand, what is vol? Like what is, by the way, vol doesn't stand for volume. It stands for volatility. I'm going to tell you exactly what vol and volatility happens to be. Volatility is equivalent to standard deviation. All right. So let's throw some numbers on the screen. It's a party now. So you're going to understand here in the next, 10 seconds, what volatility really means. What does a 30 VIX actually imply? It's going to blow your mind when you learn what a 30 VIX implies. First of all, here's a stock. Okay, what do I call every stock? You got to get this down. It's called stock. It's called a guy that had way too much caffeine tonight. That's always my excuse. Okay, maybe I'm just a few fries short of a Happy Meal. That's okay too. All right. By the way, I tell this to people all the time. You should know this going in. I decided, even before I left TD Ameritrade, somewhere around 2013, 2014, I decided that if I was going to do this anymore, that this had to be fun. Okay. I mean, I took a company public back in 2007. I did well at that particular time, continued to trade it and done well trading, but I decided that this had to be fun. And in making it fun, I have names for everything. This is stock. And there's actually a caffeine product called stock. I found that out after. So anyway, you have a stock and the stock's trading at 100. And its options have about a 20% volatility. Okay? 20% volatility associated with the options. So when you start thinking about the options, this 20% volatility, what does it really mean? It means standard deviation. Some people have no clue. What is standard deviation? It means this stock can move up $20 or down $20. And it's supposed to stay in that range 68% of the time. Now, I pulled 68% of the time, like, what? The rabbit out of a hat. 68% of the time. What is that? That's normal. That's normal. Do you fit inside the curve or are you an outlier? Huh? Okay. You're like, I'm an enigma. All right. So what I'm getting at with this is when you look at volatility and it says 20%, it means that this stock is supposed to move up 20% or down 20%. And again, this is where, the little hamster's stuck in the wheel, but this usually helps, right? So it's supposed to go up $20 or down $20, supposed to stay in that range 68% of the time. Stop right there. This number right here is actually good for 1 year. That number is actually technically good for 1 year. Now, stop. 1 year? Really? I don't care what happens in a year. Me, I want to know what happens in a month. Well, can we take this volatility right here and divide it? This is a square root sign, by the way. Could we divide the volatility and figure out, instead of how far it can move in a year, could I figure out how far the stock can move in a month? Uh-huh. Could I figure out how far this stock can move in 1 day? Absolutely. Just keep dividing it out and dividing it out and dividing it out. And before you know it, you could divide by the square root of 365 to figure out like how far the stock can actually be implied to move within a given day. That's what option markets do. That's what people don't get about this whole business. Okay. The whole business can come down, right? This stock, whatever it is, this stock is implying movement of plus or minus $20. But that's within a year. Who cares? Okay. When you guys look at the VIX, you know what the VIX is? The VIX is implying movement of the entire S&P 500. It says the S&P 500 is supposed to move at a rate of 30% within a year. You know where the S&P 500 is right now? Okay. It's 3,100. Well, by tomorrow it'll be 3,200. It's 3,200. And that thing's implied to move 30%. Are you ready to get sick right now? Because that's a freaking huge move. Sorry for getting so graphic, but that is huge. Now, give me a stock that can move huge. Okay? And I'm telling you right now, you start learning this stuff, you're going to see the whole marketplace is going to come to light. Things are going to blow people away when you start looking at this stuff on a day-to-day basis. And that's the thing. Like I told you, you come here tonight, I want you to learn something. And I really do. I want you to learn something because you don't learn something. This ain't worth your time. It's not worth my time. I want to make sure that people understand this logic. Now, big stock that can move. So of course, everybody goes, Tesla, 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 Tesla. Right? Like 600 people on tonight. It's a quiet night of 600 people. It's like 600 people on tonight. And it's funny because no matter what, by the way, yes, you're exactly right. It was at 3,150 earlier, but yes, the marketplace is now at 3,200 tonight. Okay, if you guys missed it, there was some after hour news in there, so we jumped up a little bit, like some 30 points. So let's talk about Tesla. Tesla can move. It can move. What I just explained to you, okay, and what I just explained to you was about what? It's something called expected move. Whoops. Let me put the expected move. What's EM? Right there. That's it. See, this, okay, we were just talking about a stock with 20% volatility. Then we were talking about the VIX, right? What's the VIX volatility? 30. Okay. So VIX volatility is 30. You're like, okay. What's the volatility of Tesla? For the next 3 days, it's 145. The expected move on Tesla for the next 3 days is plus or minus $183. Now, can that number help you? Yeah, you better believe it. You can actually trade with this now. right? You know, the next 10 days is poised to move $373. The next what? The next 17 days. Okay. Most people don't look at this stuff. By the way, this trading application over here, once again, this is think or swim. But almost every trading application now has expected move. Most people have no idea where to find it on the trading application, but now you're all going to be looking for it. Almost every major brokerage firm has a version of expected move. This is stuff, though, that never seems to infiltrate. Okay, it just never seems to infiltrate down to clientele. And I always stress this because it's one of the best resources possible to you. Now, people sometimes, I'm a math geek. Right? I'm what they call a kind of a quantitative trader. I like this. I like, oh yeah, it's going to move $183. Okay. But if you don't like looking at numbers, you're like, I'm a chart person. There you go. It's on charts. Remember, I said, we're going to give you an indicator tonight. It's called auto expected move. It visually displays the expected moves on a chart. Here it is. Okay. This is the range that Tesla's supposed to move in this week. It's a big range too. Put on your big boy pants. Okay. Look what happened last week. Look what happened the week before that. Most of the time it stays inside the expected move, but sometimes it gets vicious. Most of the time it stays mellow. How often is this thing supposed to stay inside the expected move? You guys tell me now, how often is it supposed to stay inside the expected move? 68% of the time. Does it obey? Not all the time, but when it does move outside, it does spectacular things. Now, you're starting to understand, okay, what an outlier event happens to be. Okay? Now you're starting to understand what an outlier event happens to be. What is an outlier? For our terminology right now, it's anything that's happening, okay, way out here. This is, by the way, this is a 4 standard deviation move. Okay, this is what we term a 4 sigma. Mathematically, that's impossible. It's impossible. Oh yeah, but it happened again. Do you think that there's advantages in there? You better believe it. Wait, frankly, Tesla's volatility is completely out of control. It's completely out of control right now. It's actually, it's almost impossible to trade some of the options on it and be effective in it. It's not like I haven't traded Tesla though in the past. This is in the past. Okay, I don't mind showing you this. This is not a more recent trade. This one is actually from last year. This is November 26th, okay, to ultimately December 16th. This is actually a volatility back spread, but this is trading outlier events. I said I have done extraordinary in outlier events. I put a trade on for a 20-cent debit. I closed it for an $11 credit, right? It's grand slam home run on a very, very short-term trade. I consider that a fairly short-term kind of position that you have on for a period of 3 weeks. By the way, right after this trade settled and it settled, I've always wanted a Tesla, and I actually bought a Tesla after it. I was never a big Tesla, trader. That's almost like too much volatility for me. But that particular trade, that sparked the purchase. By the way, my Tesla came with one of those in it. That belongs to me. And if you have one, you can actually drive the car from your cell phone with your child in it and make it look like he's driving the car. Do not try that at home. I'm not implicating myself in any wrongdoing. I'm saying that you could do that, okay, if you were, a crazy parent trying to drive your child in a Tesla and making them look like there's actually what they call summons. You can actually drive the car, back it up, pull it into the garage with a child in it. But it's kind of what we say, put your trading account in ludicrous mode. By the way, if you have the means to buy one, I strongly suggest it. I've gotten rid of pretty much everything after this vehicle, and that's Tesla's like an underlying. Just so you know, I take a lot of short positions. This is a bullish position, and I want you to see this is back when the thing was at 300. It's one of the last times I've actually traded Tesla, only because the volatility took off too high. It's too high. There's times where in outlier events, literally the volatility is too high, too much risk. With that, back to expected moves. So with these expected moves, right? All I want to give you the feel for right now is simply this, and this is the knowledge I want to impart upon you. Okay, most stuff is supposed to happen in here, in the meat of the curve. Outliers happen out here. Everybody got that? Okay. Now, the option markets. The option markets tell us what's expected. Think of the word expected. The option market's telling us what is expected. How? We're using the price of options to determine this range. This stock that it's at 100 should move up to 110, or it should move down to 90. But what if you look at the stock and it's not at 110? What if you look at the stock 3 months from now, okay, and the stock is trading 180? Okay, can you profit off that? And that's exactly where we're headed. Before that, okay, you got to know a little bit about your volatility. There's two types of volatility that you got to understand, right? And I just want to impart this upon you. And again, then we're going to jump directly into trades. So we have implied volatility and historical volatility. The implied volatility is options markets. Like, again, option markets say that you're supposed to move up $8 or down $8. But then we have what we call historical volatility. So we have implied volatility. That's the option markets. Then we have historical volatility. What's historical volatility? Actual stock price movement. So the option markets or historical volatility. Got a question for you. Who's right? Who's right? Okay, I'll tell you exactly who's right. The trader that's sharp enough to understand that if there's a discrepancy between these two, it's huge. I'm going to say that again. Okay, who's right in this equation? Historical volatility. You know what historical volatility is? Right? I'm going to tell you exactly what it is. So here, okay, here is an underlying that's supposed to move what? Up $8 or down $8. But it doesn't. Instead, the stock actually moves $23. Okay, and that's what? That's actual movement is 23. Implied movement is 8. Okay, is there edge in there? Think about that for a second, because that's exactly where we're headed here, right? Now, visualizing expected moves. Auto expected moves. That's the indicator that we will provide you right at the end of this webcast. It visually displays a stock or ETF smashing through what options market expected. In other words, you can see a stock moving beyond what the options market, okay, has price movement to be. What the expected move, okay, an auto expected move does is it plots implied volatility by 3 lines on a screen, and then it actually shows you historical volatility, which is actual movement. Smash through, smash through. It is good stuff, all right? So let's actually take you to it, because what you're going to have to understand here in just moments, this is, here we go. That's IWM. What's the IWM? It's the Russell, okay? This is the Russell. So it's the IWM, which is the Russell 2000 ETF. What I want to show you is what I talk about with outlier moves. The IWM should stay inside the expected move 68.3% of the time. But in recent weeks, markets just keep smashing and smashing through, okay? And the moves are phenomenal. The opportunities are massive in here. I'll start. This is the Corona crash, okay? Outlier move. Nobody's impressed with that one. Like, yeah, okay, you expected it. It was a huge outlier move. Oh, yeah, that was when the bottom dropped out, and then the bottom dropped out again, and then we actually rallied through it, and then the bottom dropped out again. We rallied through it. Every circle on my screen is a breach of expected move. Every breach of expected move. Look at that one. That one's huge. Huge to the downside. Every breach of expected move is opportunistic. Most people have no clue how to take advantage of it. That's exactly where we're going, because guess what? This is our edge. Here is your edge. What if markets continually move big, but options did a poor job of pricing larger moves? How could we go about finding stocks, okay, that are moving more than the options market expected? I'll show you. This is the QQQ. Anybody familiar with it? So tonight, so far, what have we talked about? We talked about Tesla. Okay, I showed you Tesla. You saw a couple of big breaches in Tesla. Tesla was pretty mellow, though. Tesla only went bam to the upside. Okay? But look at the QQQ. People like, forget about it. This is just the NASDAQ. The NASDAQ, dramatic and continual breaches of expected moves are providing ample setups. There's a breach. There's a breach. There's a breach. There's a breach. Oh, a couple of weeks of mellowness. There's a breach. There's a breach. There's a breach. There's a breach. By the way, that's last week. That's the week before. That's the week before it. You know that today it actually breached the bottom. All of these, okay, All of these are just, it's setup after setup after setup. Okay, listen. Every instance of expected move being breached is an opportunity that you are missing. And I cannot stress this enough because this is what we talk about with outlier moves. How can we find these outlier moves with consistency? This ain't guesswork. Okay? Now, this is going to get a little bit deep. Breathe, people. Are we okay? Everybody okay at this point? Because I want to make sure that everybody understands, I didn't just skip along and find the QQQ. That's not why I brought it up. I brought it up because the QQQ fit a very, very definitive set of guidelines for me. Okay? Just making sure everybody's good. All right. So again, every instance of the breach is an opportunity. Clearly, we're going to have to strategize this. But before we strategize it, you got to learn how to find outlier moves. You got to learn how to find outlier moves, and you got to, again, do it with consistency. We're going to employ the use of implied volatility ranking. People will go, what? In order to provide the greatest statistical odds of finding outlier moves. You're like, okay, breathe. Okay, this is going to get deep. What you're looking at over here, by the way, I said, I want to figure out what people can handle for an introduction over here. Okay, bear with me. This is the spiders. So again, I picked the spiders because it's the S&P 500 ETF. This is a screenshot that I took yesterday. You want to find something interesting about the spiders right this minute? Did you know that their implied volatility is lower now than at any point from the onset of the coronavirus crash of 2020? So what I'm saying is, here's the crash. There's the volatility. This is volatility. And then we started rally. Whoops, rally. We haven't done anything in the last couple of weeks. The volatility has actually dropped off phenomenally. Now, anybody in here can look at a chart. Anybody in here can pull this up. Anybody could probably say, like, look, the volatility is kind of low right now. Oh, right now, right this minute, it is screaming opportunistic because we're getting wicked moves every single day, and the volatility has actually dropped quite considerably. You want the cheating person's way of doing this? Don't look at the stinking chart, because the chart, you can only look at one symbol every single time. Okay, you can scan for this, and you can actually look at a what's called IV ranking, or IV percentile, and it says 21%. Implied volatility ranking. This happens to be on Thinkorswim. You do not need Thinkorswim for this. Almost every major trading application has IV rank. People just don't know what it is and where to find it because they've never heard of it. Now, before I go any further, okay, I'm going to describe what is IV rank. You're like 21%. What does that mean? Okay, what it means is the IV rank. And again, the IV rank says 21%. But the volatility here is really what? Yesterday was about 25%. Like, what is this? This is an IV rank. What the IV rank immediately tells me, it tells me, okay, we're in the lowest, okay, one of the lowest, okay, quadrants of risk anytime in the last year. It's just golden. You just at a quick glance, you can actually rank where this thing is, okay? So if you can rank it, when I say rank it, you're literally saying, all right, this thing has great odds of an outlier move coming. Why? Because it's actually ranking relatively low in still a relatively high volatility situation. I mean, net, we're still in a high volatility situation, but the marketplace is actually ranking it even lower. And this is the big catch-22 that people don't get, right? Now, that one, if the little hamster gets stuck in the wheel over there, I totally get it. Like, this is serious stuff. We start talking about ranking IVs and so forth. You can scan for this. You can pull up a ton of different data. All I'm pointing out, okay, is that the SPY is positioned beautifully for an opportunity, okay? What opportunity? Listen, understanding all of this stuff and implied volatility, it's a step in the right direction. It's just a step in the right direction. We just got to get your head pointed the right direction, okay? You kind of know what we're looking for, don't you? At this point, what am I looking for? You tell me. What am I looking for? Okay? I'll tell you exactly what I'm looking for. I'm looking for a marketplace, right, that's supposed to move in here. And it is. And all of a sudden, it just rips through to the upside or rips through to the downside. That's it. Gets up here, gets down here, gets in your face, gets wild, gets ugly, gets hideous, and we love it. That's what we're looking for. So understanding this implied volatility stuff, that's what it has to come to, okay? But what? But this needs to be turned into a strategy. You got to turn, okay, some of this knowledge into potential profit. You got to actually get somewhere with this. It's kind of cool to understand. Oh, yeah, man, I understand now what the VIX means. It means I'm screwed because we're going to move 30% inside the next year, okay? 30%. Most people, if they understood what the VIX was, they'd be like, you'll excuse me, I'll be getting out of my 401k now, okay? I'll have what she's having. Yeah, that's out of your 401k because a 30% move should scare you. It should terrify you, right? But again, this has to be put in potential. I mean, how does this volatility, quote unquote, stuff translate to profits? Big moves, they're your opportunity, okay? Unpredictability. Tonight we actually called this, dysfunctional markets. The dysfunction in the market to me right now is simply you look at the marketplace, you're like, oh my gosh, this is like the worst news of my whole life just came out, the market rallies. And then more bad news comes out. JP Morgan comes out this morning and they go, it's okay. We only made 50% of what we did last year. And we put aside just a few billion for a rainy day because nobody's going to pay their mortgage. But it's okay. By the way, JP Morgan rallied today. Wells Fargo came out, big time loss, and then turned around today and actually said, okay, this is way worse than we expected. On the conference call, the CEO said, this is way worse than we expected. And you go, oh, this is dysfunctional. And we rallied. It's good. Unpredictability. That's what you're here for. That's what we're looking for. How are we actually going to strategize? We're going to get a gamma iron on. Now, we're actually going to get a gamma iron on. This is going to involve some options. I said the O word, okay? Calm down, okay? Because you do not have to have options experience, okay, to understand the logic behind this. And I want everybody to know that because I want to throw you. Again, who here tonight has literally zero options experience, right? We've got 600 people on tonight. Who here has zero options experience? Anybody? Anybody? Just come out and say me. Okay? Me works. All right? Somebody says 0. Okay? The big donut. Oh, come on. Like 12 people are willing to admit it. I'm actually counting right now. 12 people out of 600 and something are willing to admit that they have absolutely no options experience. Hey, this is the program for that. Okay? Listen, we've all been sequestered to our houses way too long. I do find, though, that the longer that I'm locked up here in Payson, the weirder I'm getting, but it's amusing to me. So I'm okay with it. I'm all right with it. Excellent. So we're going to talk a little bit about options. And again, don't be opposed to like learning some new stuff. It's an okay thing. We're going to get a gamma iron on. Gamma irons are something that I've experimented with extensively in the past, and it kind of fell by the wayside. And then we started trading them very heavily as we started seeing sequentially outlier. And this strategy is hitting it right now. And I'm actually going to show you a couple of trades. You want to position your portfolio for a big move. So how do you position yourself, though, most effectively for extreme movements? But you do not want to expose yourself. One of the things, listen, there's a couple of trades that we can do, okay, for extreme movements. There are. You saw some back spreads earlier. You saw what I did inside of like Tesla with a back spread. Those are volatility back spreads. You know what the problem with volatility back spreads? They expose you a little bit. They expose you a little bit. So what I wanted to do, what I was asked to do for this evening, okay, people wanted to clip a lot of the risk out. And that's exactly the intention here. We are going to really clip out a huge amount of risk, all right? And you don't want to get cute. There is a lot of capital up for grabs in here. So I'm going to give you the concept of this. This is all about big movement. Okay, this is your gamma iron structure. So I'm going to structure the trade for you. So when I say structure the trade, I'm literally going to take you through, okay, structurally speaking, what this trade is. First of all, okay, this can be a stock. It could be anything. Listen, you can use my fictitious stock for just tonight. And we're going to call it stock. And it's trading at 200. Now, we are not going to own the stock. We're not going to own the stock. This is where the stock is right now, right at the 200 marker. So what do I intend to do? Okay, I'll tell you exactly what I intend to do. We're going to go out in this case, and we're going to buy, all right, a call. What call are we going to buy? Let's say in this particular case, we're going to buy a 105 call. So we're going to buy a 105 call. Let's not even worry about price. Don't worry about the price right now, okay? Because I don't want to confuse the situation. Then we're simultaneously going to turn around and sell, okay? And this is going to be a 110 call. Now, with one hand, we're actually, what? We're buying a 105 call. 105 call gives you the right to buy the stock at 105. Then we're selling a 110 call. Now, if you just put this position up, you're buying a 105 call and you're selling a 110 call. Now, for those of you that are new to options, when you buy a call, especially when it's a 105 call, what do you want the stock to do? You buy a 105 call, you want the stock to go up. Up to where? Above 105. Because if it goes above 105, your call goes in the money. But if you buy a 105 call, you don't want the stock to go to 105. You want that stock to go, okay, and I apologize for this because I just made this a $100 example. But the stock at 200, here, we're making the stock 100, okay? We're having math issues tonight, okay? Or I could make this 205 and 210. Yeah, that works better. Let's do that. That's a 2. And this is a 2. There we oh, that's much better. So the stock's at 200. And the stock goes from what? 200 up to 205. That's not going to get it done. The stock go from 205 maybe to 207, 210. No, man, you want this thing to go to like 300. You have the right to buy the stock at 205. Everybody else in the world right now, okay, if this stock shot up to like 300, you have the right to buy the stock at 205. Everybody else in the world has to pay what? 300 for it. If you have the right to buy the stock at 205, can you buy the stock at 205? Of course you can buy the stock at 205. Okay? And the stock is all the way at 300. You make a ton of money. But at the same time, you sold a 210 call. And if you sell a 210 call, now that's the weird thing about options. You buy a call, you have the right to buy the stock at what? 205. But if you sell a call, people immediately go, whoa, 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 whoa. How do I sell a call? I never owned a call. Yeah, you're selling yourself into an obligation. You're selling a 210 call. If you sell a 210 call, you are obligated to give somebody stock at 210. They go, but I don't want to give my stock at 210 because I don't have stock. You don't have to have stock. You have a 205 call. So if you have a 205 call, you have the right to buy the stock at 205. Somebody, okay, has the right to take stock from you at 210. You have the right to take somebody else's stock at 205. Somebody can take stock from you at 210. What's the most you can make in that particular spread? What's the most you can possibly make? You can make as much as what? $5. Does that make sense to everybody? You can make $5. Now, let's actually take you through this again in a little bit more detail now. So it's this $200 stock. And again, we're going to turn around and we're going to buy, okay, a 205 call. Okay, and we're going to put prices on this in just a second. So we're going to buy the 205 call. Then we're going to turn around and we're going to sell a 210 call. What's it going to cost? What's it going to cost? That 205 call. Let's get crazy. Let's say the 205 call is going to cost you $5. But then we're going to sell the 210 call, and that one we're actually going to collect $4. So net, what am I into this thing for? I'm actually into this spread right now for $1. I have to pay $1 for this. Okay, I'm in it for $1. I'm in it for $1. $1. Can I make money on it? Yeah, I can make money on it. But my break-even point is not till I get what? Oh, 205 plus the $1 I paid, 206. Okay, push this aside for a second. You have a 205 call. You have the right to buy the stock 205. Somebody has what? The right to take stock from you at 210. You can make as much as $5 on this. Now, simultaneously, that means at the same time, you're going to turn around, okay, and you're going to buy. All right, in this particular case, what? A 195, okay? And this is going to be a put. And you're like, oh no, he talked about a put. Puts confuse a lot of people. It shouldn't confuse people. We're going to make this thing even easier. We're going to make this put. Guess what? It's going to cost me exactly $5. I'm buying it for $5. This one I'm buying for $5. This one I'm buying for $5. Why? They're equidistant. The Puts will probably be trading for more, but this is a fictitious example. We'll show you a real one in a second. Then I'm turning around and I'm simultaneously going to sell, okay, a 190 put. Okay, well, guess what I'm going to sell that for? $4. What am I into this spread for? $1. So I have $1 here and $1 here. By the way, this whole thing is put on as one transaction. Now, if the stock's trading right at 200, what do I want to have happen? Let's not even worry about what the puts, because what does the put give the right to do? People freak out about puts, because if you buy a put, you buy a 195 put, you have the right to sell stock, okay, at 195. But you know what kills people? They go, you're buying the right to sell stock at 195? Yes! Then you're what? Then I'm selling, okay, the right to what? Have somebody else sell me their stock at 190? Yes. And then their head just explodes like a piece of Tupperware in the microwave for too long. For the most part, this is a $5 wide spread. Listen, the bottom line with this trade, what I want you to see, okay? What I want you to see, this trade is about what? It's about movement. If we stay in here, you're dead. You're dead, okay? If you move big, you're huge. As I told you, we're getting outlier events. Every single outlier event is an opportunity to profit, okay? If you were to put this strategy on, I just want to make a quick point. You were to put the strategy on for the next 2 months, okay? If you were to put this thing on for the next 2 months, do you think in any time in the next 2 months, in whatever stock this is, there could be an outlier move, okay? Absolutely, because almost every product, okay? But there is very, very definitive guidelines that you want to use for a strategy like this. All you need is a momentary move up here or a momentary move down here. Either direction. This is, okay, non-directional. This is actually non-directional trading. It's a very strange place for even me to be, okay? Because what we're asking for in this particular strategy is a break to the upside or a break to the downside, and that is it. Okay, we don't ask for anything but a break to the upside or a break to the downside. Now, a lot of people have seen the structure of an iron condor. Okay, those that are experienced, you have a bias. I'll tell you what your bias is. If you're experienced, you've gone out, you've actually what? You've sold iron condors. We're buying them because buying options right now is working, and it's working in a huge way. Every single example that I gave you earlier today of profitability, the entire way, okay, I moved my account in value has been on the buy side of options, okay? For the first almost 20 years of my career, I sold options premium. I sold everything I possibly could. Right now, we're a net buyer. Listen, people, you could be one trade away from this. What is this? This is a gamma iron, okay? Now this is a live, trade that you're looking at in here. And when I say a live trade, this is one that I actually built, risk graph and everything. And again, the first time you see this, people are a little bit perplexed. This, okay, is where we were trading. By the way, I took the screenshot yesterday. That's where we were trading, okay? What do you want to have happen to the marketplace? Go higher, go lower. It becomes a non-directional trade. Now, what's the only enemy to you in here? Okay, what can hurt you in this trade? And this is one of the craziest things to look at, because if you've never seen it before, you're like, I don't know. Listen, here's a trade. Okay, down below. First of all, my maximum risk, this is the actual trade. My maximum risk in here is 220, which is the equivalent, okay, of $220. If you did one contract of this, and people go, there's 4 legs to it, you're freaking out. They're like, what about commissions? Oh, come on. Commissions are 65 cents a contract these days. Commissions are nominal. It's not even part of the equation anymore. I mean, there's even brokerage firms now that are giving commissions away for free, even on options trades. But the commissions in here are nominal. It's $220. How do you lose money in this trade? Okay, anybody? How do you lose money in this trade? And I'll even tell you the max profit. Okay, the max profit it's a little bit over $3. I'm not trying to hit a home run over here. People ask me for a trade that was very consistent. Okay, that didn't take a lot of time, a lot of skill, that was great for newbies, and that produced consistent returns. So that's why we're talking tonight about the gamma irons. This isn't about trying to knock the cover off the ball just yet. But the consistency of this strategy as of late has been nothing less than incredible, right? Almost every trade that we put on, they're consistently generating P&L. And so I question again, what's the only way that you can lose money in here? Okay. And the only way you can lose money is if we do not move. That is it. But it's not if we don't move today or tomorrow. The trade, okay, as I actually brought it up, this is good till the August expiration. Okay, but you know what? I could do the exact same trade 2 months. I could even take the trade 3 months out in time. Okay, because you have more time, it's not going to cost much more, right? Even more time, you can actually alter the cost. You can push the strikes out further. It's not going to necessarily cost you more. Here's the key to the trade. The only way, okay, that you're going to take a hit on this trade is if you were literally, the whole marketplace was just to stop moving. And you could see that occurring day in and day out. Could you take a loss in the trade? Of course you could. Okay, but that loss would be so slow. You cannot take a quick hit on this trade. You cannot overnight, if you have 220 in risk, you cannot lose the $220 overnight. It is absolutely unequivocally impossible to lose $220 overnight. You can't lose half of it overnight. People, you cannot even lose 25% of your initial capital overnight. That's the most important part of this. Okay, you might have $220 invested. We're not going to let you lose, okay, much of this $220, even if you are dead wrong on the trade. Listen, it's why you need gamma irons in your life now. It's a dysfunctional marketplace. Great, gamma irons are designed to provide consistency in an inconsistent marketplace. Markets that are just ripping through. Listen, gamma irons, they're non-directional, right? That did not have a directional bias. Look back, okay? You're like, what's your bias? Yes, I have one. I'll tell you what, there really is. There is actually a bias to the trade. You know what the bias is? Move, baby. Move big. Do you have to go up here to make money? Okay. Do you have to get this far to make money? The answer is absolutely not. How about this? I can actually tell you precisely, okay, the probability of profit in this trade. There's actually a little equation called probability, okay, of profit. I can actually tell you the probability, okay, of profitability in this given trade. I'll show you in a moment. But this trade, non-directional. It overcomes a high probability being stopped out. By the way, I love this. Do you think that you need a stop order on a trade that you can't take a big hit? There's $220 at risk in there. Okay, where's the big hit? There is no big hit. With $220, you don't need to stop. We don't need no stinking stop. It defines your risk. What's defined risk? Not only can I define that I can only have $220 at risk, I can further define it. I can also fully limit capital exposure. I can do 1 contract, 2 contracts, capital exposure, right? There's a really high probability of success in this trade as well. That's something I'm going to cover here momentarily, and you never need to buy or sell the stock. Okay, I'm telling you, in this marketplace right here, right now, okay, this is pretty serious stuff. The gamma iron, it is a great way to be consistent. And is again, this is the trade that everybody keeps asking for. You know, let's not put a lot of risk on the table. Let's just do something where I can just to bleed the market out a little bit, bleed the market of a couple of dollars. That's exactly what we're doing over here. Listen, the probability of profit is really high in this trade. Okay. Now this is kind of a complex slide, and I threw this in here last minute just to see if you guys would get it. But this is the exact same trade. There's $220 of risk. This is actually the probability, okay, of hitting the profitability points, right? In this particular trade, I want you to see there's over, and if you look very carefully and sideways, there's over a 52% chance of hitting there, okay? And there's almost a 55% chance, okay? The probability, okay, of touching in here is huge. By the way, those break-even points are the worst case scenario. You're going to make decent amounts of money on here, okay, with, again, a very high probability. When it's over 50% of going up or 50% of moving down, you got to realize you can make money to the upside or the downside. Like when people look at this, they go, it's 52%. 52 is not that good. No. You're reading this wrong, okay? That's 50% to the upside or 50% to the downside. And that's, again, what we call probability of touching. In here, there is a phenomenally high probability of profit in here. And I stressed to you again, this is what a gamma iron is. And people go, why is it called a gamma iron? Because what we're really trading, for those of you that are option geeks, is gamma. We're actually riding on the idea, okay, that gamma is going to be our profit in here. That is, we're getting enough movement, enough oomph in the options, okay, to make this worth our while. Again, listen, this monkey knows outlier trading. And so should you. By the way, I'm the monkey in here. I don't think that's a Mac. I don't think he's using a Mac. I think he's actually got an iPad over here. Listen, welcome to Gamma Irons. These are trades. And I didn't want to, again, I have explored Gamma Irons for an extraordinarily long period of time. All I wanted to do tonight, okay, I won't provide you any trades that are not recent, really recent, like, okay, last couple of weeks. This is an SPY Gamma Iron. This one was actually put on May 6th. It was actually closed June 1st, okay? I paid a $2.45 debit. I closed it for a $3.15 credit. Now, I want to make this clear. Every $245 I invested, I got back $3.15. It's a 29% return, okay? This is not about the Grand Slam home run. We have plenty of strategies for this. This is about a very, very nominal amount of risk. The $245, okay, listen, that means every $245 I invested, it doesn't have to be $245. You could take this, do 10 contracts, okay, it's $2,450. You could actually do it's what? All of a sudden you could be trading $24,500 and you wouldn't do it in the spiders. In this place, you do it in the SPX, okay? I stress to you in this, you wouldn't have all that risk, okay? Even if you wanted to do this, by the way, this trade can be done inside of an IRA. It can be done in a retirement account. If you have $245 of risk, that will not be a risk in the trade. We will show you how to drastically mitigate that risk. So even though you have $245 invested, okay, you can knock down that risk in a huge way. So you're looking at this, you're like, oh, whatever, man. It's a 29% return. Yeah, it's a 29% return on what you got invested, okay? But the reality is, even if you had half of the risk in here, okay, even if you had half of the risk in here, makes the return look a lot better. Because you know what I did in this strategy? Nothing. All I did is buy it, and I bought it, okay, because the factors were right. The implied volatility ranking was right. The expected move was right, okay. I did the right strikes, everything in place, and I bought it. Then what did I do? Nothing. I just put in a good till canceled order to close for a profit, okay, and we're out. We're profitable. That's a SPY Gamma Iron. Okay. Next on the docket. Well, this is a GLD Gamma Iron. You're like, what? Wait, what's GLD? Okay. GLD. Here we go. By the way, is this one recent enough for you? I said, I'm not going to show you irons over the last couple of years. It's worthless to you. You need to see that this strategy is working now. Okay. When I say now, I mean like today, now, on the ball. Like that's what matters in this marketplace is what's working here. Okay, this is GLD, which is effectively gold. Okay, this is a Gamma Iron that I actually put on, again, trade sitting for about a month. What did I do? Fit all my criteria. Okay, put it on for a $1.83 debit, closed it for $2.39 credit. Every $183 I invested, I got back $239 to 30% return. Okay, consistency, I think so. And again, of that $183, there's just a nominal amount of risk in here. And I keep stressing that to you because that's what people wanted out of the strategy. Low risk consistency. By the way, this is a trade that I did. Obviously, all the trades that I do here at TheoTrade are shot out via text and push notification to our clientele. This is this happened to be on July 7th, which is obviously like last week. Cynthia got out of 236. HA filled at 239. Nick filled at 239. By the way, these just come directly from our chat room. Okay, people talking to one another. Neville actually closed it over here at 238. filled at 236 and 240. Okay, so we actually got out at two different prices over here. That's again, actually, if you look at the strategy, it's even better than I did. I got out at 239, in for a $1.83, out for 239. This gentleman got out at 238, 240. Okay, another 239, 239, 236. These are some good fills. Let's continue on. Next one over here on the docket. This is actually TLT. TLT, this one was actually wild. Look how fast this thing worked. The TLT, what is the TLT? Okay, bonds. I mean, do you understand that right now, I've talked about some of the most docile products. the SPY. People think the SPY can't move. Right? It's the spiders, S&P 500. That thing doesn't move. Bonds. Oh, bonds haven't done anything. Really? Bonds did enough to see some P&L. Okay. What else we got? I mean, I can go on all day of the different, gamma irons that I've had on. This is literally, I wanted to show you again, more recent trades. July 7th out, July 10th. Okay. $1.68 debit, $2.22 credit. Every $168 I invested, I got back $222. It's a 32% return, but it's a 32% return inside of 3 trading sessions. People, that's what gamma irons is. And what this takes advantage of, of these outlier moves sequentially, time and again. There's outlier after outlier after outlier. And I'm telling you right now, I wanted to give you the most recent trades, that I possibly could in this case. And I have now several gamma irons literally on as we speak that are right about the profitability point, right about to cut it. And again, I'm constantly putting them on, taking them off, putting them on, taking it off. It's been a really consistent strategy. And this is not a huge hands-on thing. This is put one on. We text them out to you, put it on. If you don't have a lot of time, although I will say this, almost everybody right now does have time, but if you don't have a lot of time, listen, each and every trade that I'm showing here today, this stuff was displayed live. Like we did these trades live and we text them out and shot them out by push notification. The trade results that I'm showing, it's perfect if you want to kind of sit back. The gamma iron is extraordinarily hands-off. It's hands-off. It uses set it and forget it order types. It's a fraction of your time. I just don't want you to feel like you have to be glued to the screen. It's not. Every strategy is different here. In fact, this is some of what our members are saying. This is just a smattering of some of the recent comments in the chat room. Good money in the queues. Thanks, Don. Nice profits. Have a great weekend. Help me pay. I like this one. So actually why I threw this in here. Ali, Don, help me pay for 1 year of TheoTrade subscription with the QQQ. These are all based. And the reason I threw these particular quotes in here from our chat room, all of these, were exclusively outlier type trades. And obviously that's the key right now to P&L in this marketplace, right? So these are a couple of characteristics of gamma irons. So it increases in value when exposed to heavy volatility. You think about that for a second. If the markets get wicked, this trade right here is going to make money. Increased value when the markets sell off or rally huge. Bottom line, that's what you need. You need a big move higher or lower, and that becomes a very happy individual. Big profit potential with downside moves, big profit potential with upside market moves, loses minimal capital if the markets continue to drift or remain flat. You're not going to get killed in here, Just count down the days. It's that easy. It's the perfect spread to reduce risk of a stock portfolio, long or short. Because you can actually use, the gamma iron itself to reduce risk of a stock portfolio. So if you have a 401k, you have an IRA, you can actually reduce risk of it, by trading this strategy against, that particular portfolio. It's an excellent tool for anybody looking for returns off of big market events as well. Again, it's about consistency, and I can't stress that enough. In a marketplace that's so dysfunctional and so chaotic, you got to find degrees of consistency. Now, the key is over here, building the gamma iron. I have to throw this up here because people get really scared, especially when they see it's 4 legs. I'm feeling a little uncomfortable over here. Like, listen, you buy one, you sell one. You buy one, you sell one. It's done. It's all done for one price. You don't have to buy this and sell this and sell this and buy this and buy this and sell this. This is all done as one trade. It's one bulk. It's called an iron condor. We call it a gamma iron because it's flipped over. It's, an unusual place, again, for a lot of people to be. But listen, do not let options intimidate you. The gamma iron below is being done for a 220 debit. That's it. You got to understand, though, that options, are the power tools of the marketplace. And I always use this analogy whenever I talk about options, especially to those of you that are a little bit newer in here. When I say I use the analogy, I just say, like, listen, if you wanted to go out and you wanted to cut down, like I'm in the forest right now. When I say I'm in the forest, I literally, our home up in Payson, all we have is like pine trees around us. You see every single day, people chainsaws outside because we have to cut down some of the bigger trees and the brush around. It's fire time of the year. To go out there and do that, you got to have a chainsaw. You got to have a chainsaw, a massive chainsaw, if you will, because it's going to be quick, it's going to be fast, it's going to be safe. Okay? If you've never used a chainsaw before, you're going to lop off a couple of fingers. Gamma irons, people, they're going to be the exact same thing. I mean, this will be a quick, fast, safe, and extremely consistent way to make money in a dysfunctional marketplace. Used incorrectly, though, and I'm telling you, this stuff can be dangerous. You have got to learn to structure, okay, your trade correctly. That's what this is about. Everybody can look at the trade right now and be like, oh, well, you know, great. I think I can build that. Listen, this is what you need to know to successfully create gamma irons with minimal risk. I mean, you got to learn to take advantage of these particular trades. But when I say you need to know stuff, to create this thing, what do you need to know? First of all, when and where do I place these trades? I just showed you some trades. GLD, right? Gold. I showed you trading the TLT. I showed you trading the spiders. I showed you a proposed trade inside of the spiders. When and where? Why am I placing the gamma irons the way I am? Okay. Why am I paying what I'm paying for it? Do I do it, this month, that month? Here, listen. How often should I place these gamma irons? And do they have to be continually monitored? I'm going to tell you right now, this is the most hands-off trade that I think I've ever created, because you put it on and then you simply place. And I want to stress this, okay? After this trade is on, this is a GTC order, good till canceled. Even I'm using a GTC order on it. Okay, because there's no reason to have to monitor the trade, because you cannot lose money quickly in a gamma iron. It's impossible to take big losses quickly. That's why I like it so much, right? How do I set up these trades? What's the correct market volatility? I talked a lot about volatility tonight. You think there's a reason for it? You have to have the volatility right to place these trades within. Okay, what expiration cycle do I use to create my gamma iron? Should I do it for a month? Should I do it for 2 months? Should I do it for 3 months? Have you looked at an option chain lately? You look at something like the spiders. There's like 100 different options to select from in terms of expiration cycles. There's an option for a week. There's an option for what? A Monday, a Tuesday, a Wednesday. There's really a Monday, a Wednesday, and a Friday expiration now. But then they have a Monday, a Wednesday, and a Friday expiration, and they have that like 4 weeks in a row. And then it goes to monthly options, and then there's more weekly options. There's a lot of options in terms of expiration cycle. One thing you have to actually key into, you have to pinpoint precisely what expiration cycle. Do the wrong expiration cycle, okay, you're already dead. What options do I buy? And which options should I sell? Okay, I'll tell you precisely. What options do you buy? What options do you sell? What is the correct probability of success for a gamma iron? Okay, we have to actually define in this trade specifically probability of success. All right. Get the percentage wrong, you don't have yourself an iron. You don't have yourself gamma. You don't have yourself an iron. The probability of success is critical in here. Did I need a large amount of capital in my account to do this? And absolutely not. And again, you could do this inside of an IRA too. Everybody always asks me about the IRA. Okay, almost every trade that you're seeing in here was done inside of an IRA. I trade in the IRA on a day-to-day basis, right? What underlyings, stocks, indices make some of the best candidates? I don't mind saying this. TLT, GLD, the spiders, okay? But from there, where do you go? Because you know what? Sooner or later, this dries up there. Then you got to move on. You got to have good candidates for this. When do I know? Okay? And how do I know when to get in and when to get out? Who's going to tell me? When do I get in? When do I get out? What are the percentage returns supposed to be? Can I do this in an IRA or retirement account? Yeah, I already answered that one. How do I do this in trades for my account size? You can do these things. And again, what's so important about this? You have $2,000 in an account, you can actually trade gamma irons. But okay, I'm going to tell you right now, if you have $250,000 account, absolutely. Do not limit yourself based on the amount of capital. The other thing is, if you have $2,000 in your account, people go, well, I can't trade actively because I can't get the day trading. It's not day trading. Okay, these are trades that are just static. You put this thing on, you don't have to worry about it. Then we'll actually help you define, what's the right amount of risk for you. Okay, how do I actually go about, tactically speaking, how do you go about building the gamma iron? And again, all of this comes down to, this is what we do here at TheoTrade. And I'm going to show you exactly what we do here at TheoTrade. We create recipes in trading. Now, if you've never heard that before, what's a recipe? It's a recipe. We create checklists in trading. What you have to understand about trading. Trading is all about answering what if. And when I say what if, entering into a trade is one thing, But then you have to go further and you have to actually manage your trade. But let me just give you a couple ideas. What might be a good gamma iron candidate? What's the correct option to expiration cycle? How much capital? When do I execute the trade? Which strike options do I buy? Which options do I sell? Okay, again, what we do here is we answer those questions. We build recipes with definitive criteria, checklists. We actually build full flow charts now. Literally, when I say checklist, okay, for each strategy and each unique variable that you're going to encounter. And I'll give you a couple of examples here, but I mean, this whole idea of like checklists, when I got involved in this business, okay, and I got involved in the business in the late 90s, I was told what to do. I worked for one of the preeminent trading firms in Chicago, okay, some really smart individuals. They told me initially what to do. When I say initially what to do, they actually gave me, if you will, definitive criteria. If the market does this, this is what you do. If the market does this, this is what you do. And they actually called them reaction sheets. Okay. A lot of what we do here and how I actually built out the criteria is based on some of those initial sheets that I was given back in the 90s. But when I think of checklists, you know what always comes to mind? It's like a pilot. Okay. You need to be a pilot going through a checklist. When a pilot enters an aircraft, the first thing they do is they open up. Okay. Well, now they actually predominantly use an iPad. But they literally go through a checklist. Okay. And they just check off items and check off items and check off items, everything, okay, to eliminate variables that could hurt you, all right? But then once you're actually in flight, once you have a trade on, okay, what if the market goes up? What if the market goes down? What if the market stays flat? How much risk am I supposed to take? What percent do I get out? What happens if a dividend's coming, expiration's coming? Every unique variable that you're encountering is going to be covered, okay? Every unique variable. If there's a variable in options, okay, it's going to be covered. That's what we do here. We are the answer to your questions. We'll give you the right probability. We give you how many option contracts do you trade for the account size? When do I close my gamma iron? What if we sell off big? What if we rally big? What's the correct return? What if the stock rallies massively? Can you fix a losing trade? It's all about how. It's about when. It's about why. It's about what price. It's just the beginning, though, of the variables that you're going to face when you trade gamma irons. Again, think about all the possibilities. You know, what can possibly happen in a market? Market can go up, market can go down, market can stay flat. That's easy. Time can move forward. When time moves forward, what's my trade going to do? At what percent should I get out? There's a dividend coming in this particular stock. There's earnings coming. Oh my gosh, what do I do with earnings? Every variable. I said the how, the when, the why, at what price. That is what criteria. That's what we do here. Listen, most people I think realize this. You can read what an iron condor is. Right now, you could go Google it. People Google all the time. They go, you might even know how to build an iron condor. Maybe you know how to build an iron condor right now. By the way, this is not an iron condor. This is a gamma iron. This is a very different animal. You can Google what an iron condor is, and I bet you no less than 5,000 pages will show up. Okay? Legitimately, 5,000 different pages will show up if you Googled what an iron condor is. That's not going to give you the recipe for success. This is gamma irons. This is based on 20 years plus of trading experience, access to client order flow for 15 years. We literally viewed and studied millions of trading accounts. This experience, I'll tell you what this experience is good for. That experience is to help bring to you, okay, all the pitfalls and potholes that you're going to fall into along the way. The criteria, okay, becomes bulletproof. The criteria is to get you out of some of the worst positions. The criteria is to get you into some of the best positions. Okay? It's to give you answers to everything definitively that can happen in this business. That's, again, what we do here at TheoTrade. And that's why I put a lot of stock into, again, we ran education, okay, at the largest brokerage firm, TD Ameritrade, okay, for over 15 years. That's where a lot of this criteria originates from. Listen, criteria is the recipe for success, not seeing a gamma iron condor. The gamma iron condor is the strategy. It's the criteria, though, okay, that produces P&L. The following strategy, the corresponding criteria, it does require the utmost attention to detail. We spent years fine-tuning this trade setup. I told you, I've been trading gamma irons, okay, for years. This is hitting it right now. Follow the steps, people, to build a trade. We have actually a live class coming up, Gamma Irons, Ultimate Guide to Buying Iron Condors. The class is coming up. It's very unusual for us to pull this off. It's live, and when I say what's unusual about it, it's on Thursday. Thursday, July 16th, okay, 9 a.m. to 11 a.m. Central Time. I'm going to tell you right now, this class will exceed 2 hours. The class is definitely going to exceed 2 hours. Putting, the final touches on it, a couple of pictures here and there. It's actually probably going to be closer to a 3-hour class. I hope you guys are okay with that. The slide deck that includes, gamma irons. I could put it in here. The gamma irons entry and exit criteria checklist. It's available July 16th for download. We will give you access, to the slide deck. The second, again, the class starts, well, I shouldn't say that, before the class starts, about an hour before the class starts, we'll make the slide deck available. The course will be archived immediately, all right? So the second that the class is over, everything gets archived. It's available 24/7. Now, 24/7 on our website, but we also have our own mobile application for iOS and Android. So, we're not new with this. We get that people can't necessarily go on a Thursday. Why is it unusual to do it on a Thursday? For gamma irons, I personally insisted that the market be open on that day because people learn much more in a live market environment. The class is $497. Now, before we go any further, I'm going to answer a couple of questions here in a moment. Before we go any further, there's one thing that I continually tell people about TheoTrade, and I want you guys to understand. We are not, about to provide you a class on gamma irons, and just let you go off and trade these things by yourself. That's not how we work here at TheoTrade. That's not what we're about. So I'm kind of curious, and again, 600 plus people tonight on, how many of you have taken an education class at somewhere at some time? Because I just want to get to the root of it. So we charge $497 for a class. But we don't kick you out the door and say, okay, go ahead, trade your gamma iron by yourself. It's all kinds of wrong. Most people we find that come to TheoTrade, a lot of you have been through the gamut of stuff out there. The one thing I'll tell you about this industry, when it comes to the education side of it, I know everybody. I worked at the brokerage firm, from pretty much from 2001 to 2015. I've seen everything in terms of education out there. And when we built TheoTrade, with a vast difference. And here's the difference. We don't kick you out the door and say, here's a class on gamma irons. We're going to trade with you. We're going to trade with you for extraordinary amount of time. We provide you support. And again, I'm going to discuss this here momentarily. Before I even answer any questions in here, I want you guys to understand everything you're going to need, for degrees of success in this business, that is what we do here at TheoTrade. We are not here to sell you a class for $497, and then sell you another class a week later for another $497, and then sell you another class. Because I'll tell you what, tonight, I'm even going to give you the indicator for this class. We give you the indicator. I told you, I'm going to give you the expected move indicator tonight. Most places I kind of find, they'll charge you $497 for one class. And then 2 weeks later, they find the latest, greatest strategy and they charge you $497 for that. Before you know it, though, you paid $497, for this class. And then, of course, you had to pay $497 to buy an indicator for a chart, right? And then you had to pay $497 to learn how to use that indicator. And before you know it, none of that works. And you had to pay $497 for the next class. It just goes on and on. That's not what we're about. Remember, I say this because I'll say it again and again. Here at TheoTrade, we do everything. We'll give you everything, to provide support from the day, and inception of you learning about gamma irons, and as long as you want to go. And again, that is so critical for me to kind of emphasize before getting into this. We are not going to allow you to take a class here at $497 and kick you out the door. We will provide everything you need to see success in this business. Allow me to explain. We have a couple of bonuses tonight for that $497. First and foremost, this is the gamma irons. This is the workshop curriculum. As I said, the class is going to happen live. Whether you're there or not, it's happening July 16th, 9 to 11 Central Time. And I'm telling you right now, the class is going to run 3 hours. Okay. I booked it for 2 hours initially, but it's going to run 3. You know what the great part of that is? Okay. I'll go 4 hours. I don't care. Clearly, you guys see, like, what else am I going to do? I have 3 little kids downstairs. You kidding? It's safer up here. Hide. Okay. But if you can't make it live, because I know it's short notice, right? I want to do this class here. Okay. I mean, like in the here and now, and I want to do it during live markets. It'll be archived. You could watch it that night, literally that night. This is not like, pre-recorded, nothing like that. You're going to see like the full Monty live, and we're going to place a couple of trades live. That's why I wanted to do it. Again, here's the workshop curriculum, and then I'm going to talk about when I said that we are here to support you. I'll just give you one of the ideas of support before I even read the curriculum. How about you can email me? You need me, you email me. You email me about specific trade ideas, I'll return your emails about it. Okay? The workshop curriculum. The first thing, you're going to learn how to use, the Iron Condor strategy from a very unique long gamma perspective. Okay? You're going to find out what a lot of other trades are missing. That long gamma is where you want to be today. You're going to learn to take directional bias out of the equation. One thing that you're not going to see in this class, you're not going to see me using MACDs, Fibonacci's, and Bollinger Bands. The only chart you're going to see is expected move. You're going to learn to use the power of option volatility to your advantage. Number 3, probably the most important thing, step-by-step criteria. So during the class, we're going to take you through all the criteria, how to enter the trade, and more importantly, how to take the trade off. Nothing's going to be left to the imagination. And number 4, how and where you can find edge, in buying iron condors in order to generate a steady income stream for accounts of all sizes. Number 5, how to buy options premium in the current market environment using gamma irons. One of the most important things, we're going to make this applicable to the right here, to the right now, but also, to future possibilities of the marketplace. Number 6, guide to trading iron condors, regardless of market direction. And of course, number 7 here, how to use these repetitively to generate incremental gains in trading accounts of $2,000, retirement accounts. That is the curriculum set forth. The mass portion of the class in terms of time is really about the criteria. That's where I put all the emphasis into the class. Yes, we will teach you a tremendous amount about structuring the iron, right? And how to actually structure the iron. But most of the class of a 3-hour class, 2 hours and 20 minutes of it is more about criteria. Now, as I was saying a moment ago, we here at TheoTrade, we don't do a class for $497 and just out the door and come back and we'll see how you're doing. Everything that you're going to need to succeed in this business. And that's how I say, people, they want a bonus. We go way beyond one class or one indicator. Again, I've watched the education industry since 2001 when I entered the brokerage world. People want everything. They want everything to be able to trade. They want everything to be able to invest. They want, everything for charts. They want to be able to email, people like myself or chat with us. Go for it. And you want it at one place and you want it at one price. And that's what we do. Here's the first bonus tonight. From inception, tonight, now, you get access to 94 trading classes. I'll just make this really clear. Every trading class that we have done here at TheoTrade since we launched TheoTrade, remember, I exited TD Ameritrade 2015. We launched TheoTrade 2016. Since inception, there are now 94 trading classes. Well, with all due respect, this will be 94. Gamma Irons will be the 94th class that we have done here at TheoTrade, the ultimate guide to buying iron condors. And again, it is live July 16th. In addition, to the live class tonight, you can watch Maximum Returns with Infinity Spreads, the guide to surviving and thriving extreme volatility. Here's volatility back spreads. Those back spreads, did those interest you earlier? Like the Tesla back spread, the IWM back spread, the TLT back spreads. If that did it for you, watch the class tonight because you have access to it. Literally tonight. Guide to small account growth with in-out spreads. This, unquestionably, is the most prolific class that we've ever put together. The in-out spreads is the most heavily traded strategy ever. Not just in the history of TheoTrade, even at TD Ameritrade. People in-out spreads, everyone learns in-out spreads. That's why I said, you got to understand the guide, to buying iron condors, gamma irons. But I put a lot of weight into in-out spreads as well. You have access to it. That's why I said for $497, for $497, we won't just kick you out the door. We give you access to everything in here. Black book spreads, how to collect income being short, the next big short. This is the risk twist spread class. This is selling high probability spreads, iron condors. This is actually selling iron condors. What's kind of cool, you can actually use them in combination. We're going to get there. Selling premium, minimizing risk, day trading NASDAQ futures. We have day trading classes for those of you that want to sit there all day. We have day trading classes. We have instructors, okay, that's all they do. By the way, 94 classes. I didn't do all 94 classes. This TheoTrade is not the Don Kaufman show. TheoTrade has got some very, very deep talent, which I'm about to introduce you to. Covered calls, essential skills for consistency in trading, top 10 skills for growing a small account. There's pairs trading. You want to go deep? People, I'm just scraping the surface. 94 classes in total. As I said, it's access to over $9,000 in classes alone. And right off the bat, I want you guys to go, how do you guys do that? Listen, we built TheoTrade, okay? We looked at a lot of different ideas. We could sell classes here and sell classes there. I can't stand it. You get 94 trading classes. You get the full Monty from day one, because to understand gamma irons, that's phenomenal. Okay, it's phenomenal. But some of you want to take the big shots in the marketplace. You got to learn about volatility back spreads. It's not right to charge you another $497 for a class. Okay, some of you just want to trade on a day-to-day basis. All right, so NASDAQ futures class. All right, by the way, the NASDAQ futures class, phenomenal. You want to learn to trade intraday? I'm telling you, this is the place to do it. This is the place to do it. These guys know how to cut your risk, and they kill it, okay, in the NASDAQ. We give you access to everything. As I said, it's not just about, this is not the Don Kaufman show. Here's the instructor lineup at TheoTrade. There are 7 full-time instructors, including myself. First on the list, Jeff Bierman. By the way, there's no particular order. Okay, Jeff and I have actually worked together for quite some time. Jeff worked at Thinkorswim, was obviously there when TD Ameritrade acquired us. If you've ever been on the Thinkorswim platform, how many people here have ever been on Thinkorswim, which stands for TOS? Jeff actually built over half the technical studies. Over half the technical studies come specifically from Jeff Bierman. Jeff is also a professor of finance at Loyola. He was also just upped. He is now a professor, okay, in the graduate program at Loyola. So if you know anything about Loyola, some of the people that have actually lecture at Loyola, you have Nobel laureates at Loyola. And Jeff Bierman. So we've actually had Jeff on staff now almost since inception of TheoTrade. Next on the list, Matt Williamson. Matt Williamson, he's actually our market neutral guy. What's interesting is I'm teaching a class. This gamma irons is market neutral, okay? But this is actually our market neutral specialist. That's Matt Williamson. Matt, I guess the best way to describe Matt, he's almost like a little bit of an engineering geek. If you're into spreadsheets, if you're kind of a math geek, this is the guy you want to torture with emails right here. So torture Matt with as many emails as you possibly can. He likes to share spreadsheets. He is a very introspective trader and can answer a lot of the hardcore mathematics questions. Next on the list, Corey Rosenblum, senior strategist and our resident swing trader. So Corey is one of the individuals that does trade on an intraday basis, but Corey is also very, very good with directional bias. When I say directional bias, charts. Okay, it's great with directional bias and swing trades. Brandon Chapman. Brandon also worked with me at TD Ameritrade. I'll tell you what, Brandon, he has the designation of CMT. Interestingly enough, he's the only one on this list that I put CMT. Corey Rosenblum is a CMT, and Jeff Bierman is also a CMT. Just so you guys know, there's only a few thousand CMTs on the whole planet. We have 3 of them actually on staff here. CMT is not an easy designation to get. It's not like a brokerage license. Okay, to get the CMT, that is a serious test. So Brandon worked with me at TD Ameritrade, and I'll just tell you a little story about Brandon. Brandon works specifically in the education division of TD Ameritrade, and when he worked in the education division, he wrote the book for a class, okay, that was sold at TD Ameritrade. Some of you have probably taken this particular class. The class was 18 months long. It was an 18-month class, okay, costing over $24,000 for 18 months. And the reason that I stress this with Brandon Chapman, Brandon literally wrote the book for the 18-month long class at a price tag of $24,000. And we'll tell you right now, what we offer here at TheoTrade absolutely smokes it. There's nothing, okay? There is nothing at any price, okay, and at any price point that's going to cover this much. There's 94 trading classes. 18-month class didn't cover anywhere near that. Okay, it just pales in comparison. And I'm literally telling you, you go anywhere in the world, you're not going to find anything as complete as the archives that we have here at TheoTrade. Next in the list, Steve Slim Miller. Slim's actually been trading since 1973. He's a 43-year veteran stock options and futures trader. Should probably up the number of years over here because it's been a while since I have. Slim has got some of the most phenomenal courses in terms of trader psychology on our site. He's also wonderful on futures, okay, and cyclical analysis. Last but definitely not least, Tony Rago. He's our NASDAQ futures trader. He's intraday. What Tony does all day throughout the course of the day, Tony actually calls out trades along with Corey Rosenblum in the chat room live. That's what they do. That's their job. So that's the first bonus there, is access to 94 trading classes amongst these instructors. Second bonus over here, all access TheoTrade VIP membership. So as I said, we are not here to sell a class for $497. Okay, we don't believe in that. We're going to give you everything that you need, okay, in this business, period. Okay, for $497, we're also going to give you 3 months unlimited access to TheoStream, okay, which is what? It's a live trading chat room. We broadcast 6 hours per day. Again, we broadcast for 6 hours a day. Our traders provide real-time trading ideas, real-time market insights. By the way, you're interacting with us. We have a chat room. I'll show it to you guys here in just a couple of minutes. You see our screen. People ask me that all the time. Like, do I have to look at you? No, you definitely don't want to see me. Okay? I've been sequestered for a long period of time. I've given up shaving. Okay? No, we actually see our screens. You see our screens. You can actually follow all of our trade ideas. We also do text and push notification, including with gamma irons, meaning that when we do a gamma iron, we'll shoot it out to the masses. Okay, that's what we're about. We have 5 distinct trading portfolios. We have daily coaching sessions. Okay, when I say coaching sessions, this is continued education. Every single day, we broadcast for 6 hours a day. Every ounce of the 6 hours per day is archived. Okay, and you could watch it later that night. You can actually watch it on your mobile device, and you can speed it up like 2 or 3 times so we sound like chipmunks. It's good. That's fair. Okay, we do that. And again, the daily coaching sessions, are continued education. Guess who does the daily coaching sessions? It's Professor Bierman. Last but definitely not least, and I put a huge amount of weight into this, we'll actually answer your questions via email. And I'm telling you right now, when you email us, you don't have to be like, so I have this friend that has this stock and he was thinking about doing. Listen, be forthright. Shoot us the position. I don't care if you take a screenshot. It helps me. Email me what your position is. Am I doing this right? Email me. Okay. Do I have the trade set up correctly? Bounce ideas. What does it take me? 2 minutes to be able to answer an email? If it's 2 minutes of my time that's going to save you, okay, a couple of $1,000, I think it's worthwhile. Okay, we answer thousands and thousands of emails a week. Just so everybody knows, we ain't new at this. We launched TheoTrade in 2016. There are now over 6,000 clientele in TheoTrade. Why? Because we do everything. Okay, we're going to give you access to $997 of support, trades, and insight. It's all part of it. Okay, so you get 3 months access to what? The trading room. You get 3 months access to all of our trade ideas. You get 3 months access to emailing us as much as you want, right? You get access to, again, all of the archives. By the way, we don't just archive like a day or two. We've archived every word spoken on TheoTrade since 2016. By the way, we launched literally the first day of 2016. The first trading day of 2016 is when we launched. Every single nuance and word spoken has been archived. Okay, and is available for you to watch at your leisure. You can even search for it. I'm not done yet, so that's the second bonus. Okay, I put a lot of weight in just to the email because when people think about, when people think about paying $497, I got a question for you. Is it worth $497 if you emailed me once or twice? Okay, and I saved your proverbial behind? I think so. Because that's what I'm about. I don't mind answering an email if I know that I just saved somebody a couple of grand. This is real like trading. And most of our guys here at TheoTrade, these are former brokers. Okay. You can bounce off anything. We've heard it all. I mean, we've heard it all. We've seen it all. Most of us had access to your accounts in the past. We ain't new at this. On bonus number 2, we're also going to give you access to every indicator that we have. When I say every indicator, tonight, we're going to give you the auto expected move. When I said we're going to give you the auto expected move, we're literally, going to give you a link for auto expected move momentarily. We also have indicators called S&P 500 gravity points. We have the TheoTrade RSI Laguerre. It's a Laguerre polynomial. Very cool overbought, oversold indicator. Quantix, cumulative tick indicator. By the way, Quantix, I live or die by it. That's for intraday trade. NQ levels, this is for NASDAQ traders. Next generation squeeze indicator, complex position tracker. IV rank versus percentile. The gamma irons class is going to have this in it as well. TheoQuant, unusual put options activity, sizzle index, SPX expected move. There's a ton more. It's over $1,800 indicators. We give it to you. Why? We use them every single day. We don't have a choice. What am I supposed to use Quantix and be like, you can't have it. It doesn't belong to you. I can't stand that crap. If we build an indicator, I don't care how much time and how much money. If we build an indicator, we have 6,000 clients. We'll give it to you. There's no, whatever. We build an indicator. It costs me a couple of $1,000 to build some indicator. I think I'm not going to give it to 6,000 clients. It's going to make people happy. And if the stuff works, it's better for us. Listen, what we do here at TheoTrade, we include everything that you're going to need to invest in trade. Now, I want you to understand that this is not just about some, crazy active trading. If you want to talk about long-term investments, I have very deep knowledge of bonds, commodity trades. Again, I was in the brokerage business for 15 years. We could talk about investing and trading. We give you classes, we give you coaching, we give you email access to our instructors, we give you live trading chat rooms with live trades. We give you every indicator and scan that we build, and we have mobile access for Android, and for Apple, iOS. It's everything you're going to need to succeed. And I want people to know that. What we've really built here, TheoTrade's the Netflix for traders. You name a genre of trading, we have it. I'm going to show you a little bit about TheoTrade here momentarily. I'm going to show you the actual site, TheoTrade, and take you around, answer a couple of your questions here momentarily. Tonight, TheoTrade, it's $297 for 3 months. That includes everything we just talked about. All right, that's the special for this evening. It's $297 for 3 months. And I'll just go through real briefly what it is. That includes gamma irons. That's the class coming up. That is the class coming up live this Thursday. We're going to give you access to over 94 trading classes. Everything's available immediately on demand, other than gamma irons, which is coming up live. That's going to be live July 16th. There's new monthly classes. So we're not going to stop with gamma irons. Don't you think in the next 3 months we're going to have more classes? Of course we are. We have a live trading chat room. We broadcast 6 hours a day. I know that not everybody can make it. It's all archived. If you just want to tune in to like an hour archive a day, how long will it take you to listen to an hour? You can go at 2 times the speed. It'll take you 30 minutes a day to listen to an hour. We have 59 proprietary indicators and scans. We have text push notification. These are trade ideas we shoot out. 5 distinct portfolios, trading coaching sessions done by Jeff Bierman. It's Professor Bierman. Stocks, options, and futures. And we will directly answer questions via email. If you go right now, TheoTrade.com/gamma. G as in George, A as in Apple. M as in mom, A as in Apple. It's TheoTrade.com/gamma. One thing I want to make a point about real quick over here. It's $297 for 3 months, because I already see somebody already came into the chat room and already asked it. They go, well, what happens after that? Listen very carefully. It's $297 for 3 months. This is not a reoccurring charge. We charge you once. Why? People can't stand memberships. By the way, I apologize. I said earlier, I go, TheoTrade members. They're not members. They're clientele. Every 3 months, we will shoot you an email and say, would you like to do this again? We check with you. We never do reoccurring charges. We did that in the past, and you know what? It's like a gym membership. People hated that. How do you get out of the gym membership? You don't. We hate it. We hated it. We thought you would hate it. It's $297. By the way, if you want to do this after 3 months, you know how much it costs? $297. You want to do it 3 months after that? It's going to be $297. This is not like an introductory price. There's no gimmicks here. I hope you guys understand that. We built this, okay, for the masses. We built this, and when we say we have 6,000 clientele here, yeah, and we're 4 years in and counting, okay? And we can add some more instructors, help you guys out, okay? Add more individuals that are traders to help out answer emails. We have no problem doing that, okay? Our staff over here, pretty sizable. We'll make it bigger. We hit 10,000 clientele, not going to be a problem. Again, the reason we do this is, again, it's about volume, it's about size, but it's $297 for 3 months and includes everything. Now, in addition to it, we want to make sure that everybody that comes to TheoTrade wants to be at TheoTrade, right? And I'm going to make that clear here momentarily. And I'm going to show you a little bit about the TheoTrade site momentarily. But for tonight, make it a riskless trade. It's everything you're going to need to start trading. From absolute novice to expert, okay? We'll put a money-back guarantee on it. Trade with us over the next 3 months, okay? And I want to be clear about something, all right? Trade with us for the next 3 months because you have access for $297, okay, for the next 3 months. If you're not satisfied, we'll give you your $297 back, okay? It's a full refund. By the way, I don't classify what the word satisfied means, okay? Are you feeling satisfied? There's 6,000 people here right now, all right? If you're not satisfied, you don't need to be here. I get it. And we'll give you $297 back. It's $297, okay? We want people, right, that want to trade with us. We want people that understand this business, okay? And listen, some of this stuff isn't instant coffee, instant tea, but if you're willing to put forth a little bit of effort, you're going to love what we do here at TheoTrade. By the way, here's our stipulations, and I kind of say this tongue in cheek. We have stipulations here, all right? When I say stipulations, you got to do 10 trades in the next 3 months. Is that fair? Because I'm going to tell you what happens. People sign up for $297 and they do nothing. And that is not fair to us. They do nothing and they go, I paper trade and I do. Listen, one thing I will say about Satisfied, you have to trade. You got to trade with us. Your initial account value has to be $2,000. You have to do 10 trades. 10 trades in the next 3 months. We will send you texts. We will send way more than 10 trades out in the next 3 months. You must follow our criteria. It doesn't just have to be for gamma irons. But if you start making stuff up, you're like, I did the triple naked backflip spread and I made it up. You can't do that. You got to follow our stuff. And by the way, you have to trade real. This ain't paper trading, people. You got to make it fair. And I'm going to tell you why we do this. I added the stipulations because what people will do, they'll sign up for $297. They'll never trade. Okay. Then they'll just bail on us and go, give me my $297 back. So you got it. For us to put up our money where our mouth is, you got to actually put a couple of trades on over here. And again, the risk in some of these trades, I don't care. Be capped in one lot. You know what a one lot is? It's one contract. The trade I showed you earlier, $2.20, you're going to have $220 at risk. There's a lot of trades that we do here. Like there was a trade I showed you earlier. We had $88 at risk. That's it. Okay. This is a phenomenal business now. It's like utopia. Okay. It's completely riskless trade. And we do this because we want to make sure that everybody is good. Everybody is happy with us. Listen, get into TheoTrade now. We're going to work with you directly. There are 30 riskless spots available this evening. We do that simply because it's a matter of trade size. Okay. By the way, in terms of the riskless spots, I will let each and every one of you know if you enroll for TheoTrade right here, right now. I'll let you know if you made it into the riskless spot. There's 30 spots available. There's about 589 people on right now. Okay. The reason we do 30 spots, I have to actually do reconciliation of the trades. As I said, you got to do 10 trades and you could send us those trades. Okay. All of a sudden you do 10 trades. There's 30 people and I have to reconcile the trades. It's a lot. And we give unlimited email mentoring. Again, send us your trades. The $297 riskless offer has never been available with Gamma Irons. That's because Gamma Irons ain't never happened here before. And I'm telling you, there are 30 spots open for it tonight. Again, I'm going to bring you into TheoTrade momentarily. Before I did that, I wanted to actually throw up an email or two. These are from some of our clientele. I call them members clientele. This is actually from Brian. And I picked this specific date because it was March 16th. And it's not because it's an older email. It's March 16th. It's in the middle of one of the most hostile crashes that anyone has seen since the Great Depression. And it goes like this. Don, wow. I want to again say thank you for what you've taught me in the last 2.5 years. Okay, I bought into what you taught about risk twist spreads and duration positions and started to trade options almost a year ago. I missed out on the last market move up, but at the moment, my IRA is up 14.8% for the year. Stop right there. This is on March 16th. Okay, the biggest crash in recent history. This gentleman's actually up 14.8%. Okay, for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. And I wanted to share that with you guys because to me, that's one of the most important emails I could possibly get. I'll give you one more. Okay, one more, and then I'll start answering some questions in here. This one actually comes on March 26th. Don, I've learned more in the past 4 weeks managing and defending my portfolios, okay, than I've learned in my entire trading life. Okay, nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction. Clearly, you don't have to be a teacher, but thank you for doing so. Stay safe, Chris. And again, of all the emails that I've got here, okay, that's the kind of stuff I want to hear. You're in the middle of the most hostile crash, okay, in any recent history. We're getting emails of people that are actually up in their IRA, people that are not losing, okay, their life savings. It's important. Listen, TheoTrade, get in today. Everything is $297. Again, the Gamma Irons class, Unlimited Guide to Buying Iron Condors, is live July 16th. Okay, the first bonus, you get 3 months all access, okay, to our trading chat room. Everything's archived 24/7. We have text and push notification. We have trade ideas and portfolios you can follow, trading indicators and scans, daily coaching sessions, 10 hours. Okay, the 10 hours is of coaching sessions. Okay, bonus number 2, we give you access to all 94 classes. Everything from day trading to swing trading to technical trading, okay, beginner options trading. And if you're an absolute novice, that's fine. I'm actually going to show you that. In fact, I'm going to show you right now. Okay, if everybody could go to TheoTrade.com/gamma. I'm actually going to take you over to the site because, first of all, I want to show you a little bit about TheoTrade. But I also want to take you through, this is TheoTrade.com/gamma. Make sure everybody's good, tuned in. All right, let me make sure that we're good over here. We're not responding. It's fine. By the way, again, let me throw up the website while waiting for that. It's TheoTrade.com/gamma. Okay, if you need us, we're here now, okay, in live chat. However, you can also just chat into the GoToWebinar if you would like. It's kind of an either-or situation. But I wanted to take you, okay, in here for just a moment, and I'm also going to show you a little bit about TheoTrade. So first and foremost, to enroll tonight, there are 30 riskless trade spots left. Click right here, add to cart. The reason I'm doing this and taking you through it, I mean, most people could figure that out, right? Okay, one of the most important things that I want everybody to know is that as you start to scroll down on here, it is a one-time charge, okay, a one-time charge of $297. Actually, you can even break it into payments of $149 if you so choose, okay? But the reason I bring this up is it is not a reoccurring charge. You're not signing up for a membership. It's a one-time charge of $297 for 3 months. And I always overemphasize that simply because I personally don't like things like gym memberships. If you missed the picture earlier, I built a gym in my house because I've had it with gym memberships. And the coronavirus pushed me over the edge to build the gym in the house. But here's the funny irony. I can't get out of my gym membership without physically going into the gym. So I canceled the credit card. You don't have to do that here at TheoTrade, okay? Because it's not a membership. Again, click add to cart. Now, before I go any further, again, everything is listed directly in here. Both bonuses, obviously, okay? You get all 94 classes. The second bonus is access, of course, to everything we do inside of the chat room, shooting out trades, email access. It's all there for you. Now, before I also go any further, I want to actually show you TheoTrade. This is TheoTrade. So welcome to TheoTrade. This is actually what we broadcast day to day, meaning that this turns into our live screen throughout the course of the trading session. You'll actually see literally my screen. Down below over here, this is actually our clients communicating to one another. Okay, so if you want to, people talk about trades in here. We encourage it. You can talk about anything you want in here for the most part. All right, you just got to keep it PG-13, people. PG-13, please. So here, Vernon is saying plus 1,000. Okay, on the gap up, since I have 2 runners on, they're actually talking about trades. And listen, this is as late as, a few minutes ago. On a given day, okay, there's a few thousand people in this chat room. We trade everything you can dream of in here. Okay. There are stocks, options, futures traders in here. Again, everybody is talking about very specific positions. If you've got questions, you can ask other clients, but we're also in here too. In fact, when you see, okay, when I say we are in here, okay, our posts are going to be highlighted. There we are. Okay. All right. Last trade of the QQQ. This is actually us posting in the chat room. So it differentiates who posted what and what time. So this is what the actual chat room looks like on a day-to-day basis. This is also where the class will actually go on. Now, some of you guys are brand new. What do I mean brand new? Never traded before in your life. Good. That's actually what we built. It's called Start Here. What Start Here ultimately is, well, we do just that. We take you from absolute novice to the extreme there. So when we say start here, we're saying this is the place, okay, this is the place you want to start. Now, I know some people are a little bit more experienced, but like options 101, options 201, here. Even for the most experienced trader, I'm serious about this. Go in, literally, go in here, go in tonight. The most experienced trader, watch order execution part 1 and 2 and 3. That'll save you more than $297 in the next couple of days of trade. Order execution, okay? Again, I've worked in the brokerage business and helped actually build the order execution for Thinkorswim. So I can tell you every nuance, okay, and this class will actually take you through every nuance from the time you actually click send to the time it actually gets filled by what exchanges, and we'll actually show you how to get price improvement. I put a lot of weight to the order execution class because, even for the most experienced trader, most people don't know that much about order execution. The next thing I'll actually show you here in TheoTrade, this is all of our classes. When I say all of our classes, option classes and option newbie classes and technical analysis. The classes are broken down. This is 94 classes. They're broken down into different genres. Like if you want to see the option strategy classes, so I'll click directly on option strategy classes. It's going to take you into the archive. Sell premium, manage risk. The next big short, weekly options advantage, butterfly's guide to weekly returns. Okay, in-out spread, how to collect income being short, fruit fly for consistent. Okay, duration iron condors is a straddles class. Guide to maximum edge trading earnings if you're interested in earnings. We have classes on back spreads, volatility crash course, guide to surviving and thriving extreme volatility, black book spreads, controlling your risk. Obviously, we're going to be adding gamma irons to this as well. All right, last on the list over here, and again, I could go through all day. Last on the list, I'll tell you what. If you come over here to member home, I always want to show you this, and I always forget about it. Member home, okay? This is actually almost like a Google search engine. Put in any topic that you can dream of. Okay. Tonight we're talking about gamma. So if you click gamma, every single session here at TheoTrade, literally every single session here at TheoTrade that mentions gamma is going to come up in here. Gamma. Join Don Coffman for Gamma Irons, ultimate guide to buying gamma irons, right? That's what we're doing actually right now. So a market of bond shocks and gamma squeezes, all right? This is a coaching session. This is risks of gamma and the benefits of gamma. So again, there's a lot going on obviously here. So I'm going to come back right over here, and again, I'm going to answer some of your questions right now. As a reminder, again, go to TheoTrade.com/gamma, click add to cart. As a reminder for all of you, okay, the link to the auto expected move indicator is found directly at the bottom of this page. Auto expected move indicator, okay, is found directly at the bottom of the page. Everyone, if you're enrolling right now, you need not worry about that indicator. We have the indicator obviously on TheoTrade. We will help you load it. Okay, and that in all the different indicators that we use here at TheoTrade. But again, it's TheoTrade.com/gamma. All right, I'm going to hop off this page. If there's questions, fire them in over here. Okay, fire them in the questions as you guys are enrolling. We're here to answer them. I am going to answer some generalized questions for you guys right now, and then I'm going to get very specific. So a couple of questions answered. People always ask this one. What do you need to get going here? You need a laptop, internet connection. I think we have everything that you're going to need to get started from absolute novice to the most extreme. You don't even need necessarily a laptop, even an iPad. Okay, it's fine. iPad, Android, tablets are, good to go. So that's it. That and internet connection. Okay. I'll also suggest in a moment here that you have a cell phone. If you do have a cell phone, fantastic, because it's easier for us to do push notifications. Okay. So that's the first question that always comes up. That's what you need. And again, from novice to the extreme, we have some extreme classes here, but if you're brand new to this, as I said, the Start Here menu. Okay. Second thing, this is not a membership. That's like the 5th time I've mentioned it. We're not going to auto renew or bill you again. All right. Number 3. Okay. We're now providing several weekly video updates. Okay. You can follow all the moves that we make, meaning that at the end of a week on a Friday, I record different videos for specific strategies. So there are weekly updates now being done for specific strategies. Not only are we shooting out the trades to you in text, okay, but we're actually then recording weekly videos to update you on moves that I'm making, moves I'm thinking, because I want you to get in the mindset of the trader. Number 4 here, TheoTrade archives everything. We understand not everybody can watch live throughout each and every trading session. We archive everything for you. Okay, you can watch it anytime you want. Number 5, we're going to provide you access to TheoTrade mobile. You can download the archives and view at your leisure. If you fly around or you're traveling a lot, you can actually download the archives of TheoTrade onto your mobile device or onto your tablet, and you're good to go. That's what our app is for. Number 6, add your cell phone number when you're enrolling. Listen to this right now. Again, I am going to give the names of everybody here that is enrolled riskless. Okay. As I said, we are giving you a riskless trade. There are 30 riskless spots available. And I will start to read off some of the names of the riskless spots here momentarily for those of you that have enrolled under the riskless spots. But for those of you, as you're enrolling tonight, add your cell phone number. Okay. Don't freak out if you didn't do it already, because I know some people have already enrolled because I can see them coming through. But add your cell phone number when enrolling and receive text messages, okay, and download the TheoTrade mobile for push notifications. TheoTrade mobile, okay, very easy to find. We'll also send you links to everything. Number 7, you can email us anytime. You're going to receive a response within 24 hours, including trade-related questions. Listen, I put a huge amount of weight to this. This is $297, okay, for $297. If you could email a trader, okay, for the next 3 months, it's worth it. Everything else on top is just gravy. Okay. Shoot real questions to us. It's okay. I'm letting you know it's okay. Shoot questions to us. Do not wait until 5 minutes to go to the close on a Friday afternoon. Okay. I put the 24 hours in there because you know what? Some people are like, it's Friday afternoon. I got 5 minutes to go to the close. What do I do? Okay. You got to give us a little bit of lead time. But again, trade related questions. I don't care if you bounce ideas. This is not hypothetical. You bounce ideas and say, can I do this trade? I may come back to you and say, no, please don't do it. This is the worst thing I've ever seen. Is that okay with you guys? Hey, it's better I give you the truth than you end up in a bad trade. I think that's worth your $297. Number 8, you're going to gain access to every course, okay? Every coaching session, every class, every live session, everything we've ever done. All the archives are searchable. Name a trading topic, and we've got an archive on it. I mean, literally every genre of trade. Number 9. All the trades that we talk about could be done inside of an IRA, retirement account, or as little as $2,000. We're very sensitive to that. We realize a lot of people are active inside their IRA or retirement account, so we're sensitive to it. Number 10, we're here to help you get approved for options. Okay? We can help you get approved for options trading. Because people always go, I have a brokerage firm and they won't let me trade options. We got that handled. Okay? One of my friends actually runs, obviously, TD Ameritrade, because that's where I kind of came from. I have another friend now. She actually broke off and runs part of E-Trade. Another good friend that actually launched a brokerage firm called Tastyworks. Okay, another friend that's actually at Charles Schwab. You name it. We've got the bases covered. If you're Canadian, we'll even give you a suggestion for Canadian. Remember, there are 30 riskless spots this evening. Listen, get results, take action. Enroll for TheoTrade now. There's no risk to you. It's theotrade.com/gamma. Okay, I'm actually going to hop in now to the chat room, and I'm going to answer questions directly inside of the chat room. I'll read off a couple of names here momentarily for those of you that are under the riskless. Okay. By the way, I wanted to throw this one out to you. Okay. So it says, by the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. That comes from David. I just absolutely love that one. Okay. Again, go to theotrade.com/gamma. I am going to, I'm actually going to pop this back up here. I'm going to answer a few questions that are coming in directly from the chat room. Again, I put the address up there, theotrade.com/gamma. By the way, it takes about 4 or 5 minutes for me to actually see you guys enroll. So bear with me. There's a couple of people that have popped in here. This is, again, the 30 riskless trade spots. Peter B. from Massachusetts, Neil G. from Oregon, William R. from Indiana, Rahul B. from Florida, Arnold M. from Hawaii, Jerry J. from Illinois, Thomas O. from Georgia. I'll continue to read off more names as they actually come in. Again, it takes about 4 to 5 minutes before I actually see them specifically on my screen. All right, as I was saying, again, I am going to answer some very specific questions now directly from the chat room. Robert asks a really generalized question. What determines the exit point? Okay, the exit point is going to be determined specifically upon a percentage return, Robert. And I'll be even more specific. I'm going to geek out on you for a minute, Robert. Okay, when it comes to the exit point in here, it's based on what they call the probability of touching. So the strategy itself all relies on the probability, okay, of us touching, okay, a 30, okay, plus you'll see point move in a major index product. And you're actually going to see this elaborated upon inside of the class. And you'll see when I say 30 points, you're going to see what that specifically pertains to. But it's actually in large part, and again, this is one of the reasons I want to do it during the market open, is you want to see what the probability of touching is all about. And it provides a really, really high probability of success in the ultimate strategy over there. Okay. Chris actually said, can you trade this for me? So I don't do that anymore. So Chris, little background on me. Okay. I did trade quite a bit of capital. I actually was a registered investment advisor when I first started specifically with Thinkorswim. I helped run over $300 million of capital for the firm, and I was in my early 20s, pretty knowledgeable trader at that point in my career. And I'll tell you, over the years, I enjoy this, but I don't enjoy trading others' capital. And I don't mind sending out some text messages of trades that I am specifically going to be getting in and out of, okay? But I do not like the regulated side of that brokerage world or the registered investment advisory world. I am, and have turned down in numerous positions and managing over billions of dollars of capital. It's just not an interest of mine at this point in my career or time. So I don't mind telling that to people. And listen, if you want somebody else to manage your money, the problem with people managing your money is simply this. Okay, they're managing your money because they don't have their own. And there are very few people in this world, and I'm going to stress this to you. There are very few people in this world, okay, that are ever, and listen to me, going to manage your money, that know what the hell's going on in this business. And I don't want to be so blunt, but I need to be blunt because people think that, the registered investment advisor has experience. What? Because they took a test called the Series 63? Yeah, guess what? I've taken the Series 3, which is for futures. I've taken the Series 4, which is an option specialist. I had my Series 7, okay? I had my 10 to actually run an entire office. I had my Series 24. I had my Series 66, okay? I actually had Australian registration, and I've even done 2 Canadian registrations. You know what that makes me? A good test taker, okay? And that's it. And that's, the buck stops there. Just because they can pass a test, they can't manage your money. I'm telling you. When it comes to your capital, you're the only one that's going to care about it, right? Everybody else, they don't give a crap. They're just going to make 1%, 1.25% and move on, okay? Mutual funds, okay? Diversification is dead, people. It is dead, okay? Diversification, Apple is 6% of the S&P 500. Microsoft is 6% of the S&P 500. It's well diversified. Sorry, I had to go off on a tangent there for a second. I get angry about that stuff because, again, I don't want to manage your money. I really don't. And we've talked about that extensively, when I was in the brokerage world. They go, oh yeah, you should go back into money management. You could manage a couple of billion here when you leave TD Ameritrade. I don't want to do it. I like doing this. I don't like doing that. By the way, a couple other questions coming in over here. Oh, there's a few more names. I got the Thomas O from Georgia. David G from South Carolina, David W from Washington, Chris G from Georgia, Aaron S from Puerto Rico, Ernest K from California, William D from Michigan, Samuel S from Tel Aviv, Israel, Robert G from Maryland, Mervin F from Texas, Gene S from Florida. By the way, all the names, I want to thank you guys for enrolling tonight. Those are all in the 30 riskless trade spots. Okay, we still have a handful of riskless trade spots left. Again, there's a lot more people that are enrolling. It takes 4 to 5 minutes before they actually show up on my screen. A few more questions. Okay. All right. I like this. Somebody actually came in and said, "Why wouldn't you just buy a strangle?" Don't buy a strangle. The negative gamma will kill you on it. That's as easy question as I could possibly answer. Don't dare buy the strangle. There's too much decay in the strangle, and the probability of you making money in the strangle is greatly diminished. You know what? That's something I could actually show specifically in the class. I like it. Don't do it. It's again, that's a death trap over there. All right. Cruising back up over here. Oh, somebody said, what are the margin requirements for this? Some of the margin requirements, whatever you're paid. If I paid $2.20 for this, that's it. It ties up $2.20. That's it. Somebody was asking me what the margin requirements for a back spread. The margin requirement for the back spread is the differential between the two strikes. So if I did like a 154, 157 back spread, that would be a $3 margin requirement minus whatever credit I collected on that. Okay, it's good. All right. Couple of more people. Another one that just popped in here, WC from Colorado. I'm getting a couple more that are popping through. And again, I like this. Can you find the profitability point on TOS for a Gamma iron? David, I'm actually going to show you, okay, the profitability points specifically during the class. So we'll actually show you how to use what's called probability of touching on Thinkorswim. And I'm also, by the way, I'm not as Thinkorswim centric anymore. We're actually going to you could do this on any brokerage platform now. The other brokerage platforms, from E-Trade to Tastyworks, okay, all of them actually have the same tools these days for being able to do this. All right. Depeche K from California, Eddie A from California. Just making sure everybody knows that they're in the riskless spots over here. Listen, I've gone way over on time, and I know a bunch of people are still enrolling, and I want to try to answer every single question. I am, okay, I want to make sure that everybody understands I am here to answer those questions. After tonight, you can email me literally anytime. Just go to support at TheoTrade. We use a common inbox. So when I say use support at TheoTrade, I don't want you guys thinking I'm pushing you off, you support at TheoTrade. You need to get a hold of me, support at TheoTrade.com, put Don in the heading. I will answer your email. People are always surprised. They're like, I don't care. What am I going to do? 2-3 hours of email a day? Okay, sit on my iPad. I don't mind it. TheoTrade.com/gamma. Also, for those of you that are brand new, come into the chat room in the morning. Okay, we start precisely, okay, at 9:22, okay, Eastern time. We start 8 minutes before the bell. I will be live first thing in the morning. Tomorrow, we actually have a completely packed day, and we even have a happy hour going on tomorrow night. Happy hour, okay, is actually in the evening. It's 5 p.m. Pacific, 8 p.m. Eastern time tomorrow night. Again, that's everybody that's in TheoTrade. They all tune in pretty much right at 9:22 Eastern time in the morning. I know it's bright and early, but it's before the bell goes off. We'll give you a little rundown of what we see in the marketplace before that bell goes off in the morning. I want to thank everybody for joining us tonight. Again, there's a handful on the 30 riskless trade spots left. There's names that are still pumping through in here. I think we're at 26. I'm just counting briefly here. It's about 26 people. Again, TheoTrade.com/gamma. Thanks, everybody. Have a wonderful night. Bye-bye.